Good morning, everyone. Y'all know this time change got me all jacked up, right? I don't know what time it is. I don't know. I don't know nothing about time zones. I have this live schedule for 8:30, but it's 7:30 here. I don't know what time the market open. Hey, it is what it is. I'm just glad to be here. So good morning. I'm not sure if I'm in here by myself, but just in case, I'm going to go ahead and get some housekeeping out of the way, just in case somebody's catching this in the replay. Good morning. My name is Sandra, and welcome to my channel From Lack to Legacy. On this channel, we're all things money, investing, and mindset, particularly how to go from a scarcity mindset to a mindset of abundance. If this sounds like something that you're interested in, please stay. If this is your first time, welcome, welcome, welcome. I'm so happy to have you all here. It's so nice to turn the camera on and to see your friends in the chat, to see your family in the chat. In case this is your first time here, let me tell you what you're seeing. My name is Sandra, and I'm a very new trader. I took a class about 6 months ago. Yep, coming up on 6 months. And you know, if you're only doing something for 6 months, you're pretty new. So I'm not an expert, but what was happening is that I was trading alone and it felt lonely. I knew there were so many things I didn't know. So I wanted to create a community, a learning community where new traders just like me could come and have the benefit of more experienced traders. Hey, Fort Worth, I hope it's warm there. I hope. I think it's the first day of spring too. So, hey, welcome spring and welcome everybody to the chat. The opening bell has already started. You know, we're going to be paper trading today. So I'll just take a kind of a brief survey of where everybody is. If you're new, you've never traded before, you don't even know what trading is all about. Welcome. You found your people. I am 2 days ahead of you, but I am willing to share what I know. I'm willing to share what I've learned. And for whatever reason, I don't know, I must have did something really good in another life because more experienced traders like living my dream trading, more experienced traders frequent our chat and they help us. They drop gems. They give us free intel. I don't know why, but it's that kind of community. So please, hey Tara. So feel free, come on in, get comfy, get you some coffee, get you some tea, put your headphones in if you're just listening today. Whatever makes you comfortable. I want you to be comfortable. I want you to understand that you can ask any question. Hey, Miss Vice, I'm so happy to see y'all. Whatever question you have, drop it in the chat. If I know the answer, I'll do my best to help. I'll try. If I don't know, I promise you, there's somebody in this chat that knows way more than me, and they're more than willing to answer your question. So there are no dumb questions here. You can ask the same question over and over and over and over again. You can ask it 6 ways, and I will do my best to give you 6 different answers because nobody wants to hear the same thing they already heard. I'm not deaf. I just need to understand. So I hope you are, welcoming and receiving of that. I am not an expert. I'm not an expert. But what I am is a grandma who decided to open up her kitchen, open up her home to others who wanted to learn a skill. And I don't want anybody to waste any money. This is what I wish I had had before I took my class because it would have filled in a lot of the blanks for me. So I'm hoping to fill in the blanks for anybody who's just starting. So if you have a question, I'm going to go ahead and switch over to my paper trading account. And I'm telling y'all, look, QQQ, it jumped right out the gate. So if there's something that you want to trade, Marilyn, I've got my phone by me too, just in case we need, and just in case you need to reach out to me. I'm gonna pull paper trading in, you guys, and let's go for it. Let's go for it. Let me know if you can hear me and see me and all that other good stuff. I mean, y'all know when I'm away for a few days, it takes me a bit. Okay, how do I do this? Where's my thing? Oh, there it is. Okay, I'm bringing in my paper trading screen. Okay, hold tight. I have to minimize this. Okay, there we are. It's coming. This and this. All right, I just need to know that you guys can see my paper trade. Okay, cool. As long as you can see the paper trading screen and you can hear me, we off to the races. I think today, you guys, I'm gonna go ahead and paper trade QQQ. Let me just get over here and see. I got it on the weekly chart, but just so you know why I'm wanting to trade QQQ, I want you guys to look at this chart with me, and we're going to keep it really simple today. If you need me to go over anything like how to set your chart up, how to get logged on to paper trading, just drop it in the chat. I'll go over it. But I want you to look at this weekly chart. Man, QQQ has been on fire, 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 fire. So here's the weekly chart. Excuse me. I need some paper towel. And each one of these candles represents 1 week of trading. And so you can see it looks like our price was here, price is going up. So I'm looking at maybe purchasing a call today. We'll see if we can get in. I just think it's going to be a green kind of day. And by green day, I mean a day where price is going up. So we'll see. I'm going to turn on the news because all good traders should be aware of what's happening in the world. You have to watch the news. I'm going to turn it down just a little bit so I don't have to talk over it. Let me see, what else do I want to show you guys? Oh, you guys see these SMAs. It's kind of hard to see because you see the red lines are my support and resistance, but the blue, yellow, purple, and you can't see my 200-day, it's green. Well, at any rate, oh yeah, there it is. There's the 200-day, it's green, it's hiding in there. You can see that this candle is above all of those simple moving averages. You can also see from our MACD, you all see these green bars. You see how they were small, they got bigger. Then it looked like they started to diminish a little, and it looks like they're rebounding back to green. You see how these two lines on this indicator are spread apart in a way. This is just simple, basic stuff that you can look at. It gives me reason to believe that it would be reasonable to think that price would continue to go up. And that's what's happening. We opened up at 308 and in the low 308s, and we're at 308.40, 308.39. We're hovering around there. You can see the RSI down here is above 50, and it looks like it's pointing up. I'm going to be curious to see how that works out. I'm looking at my TTM squeeze, and they started blue. This is an uptrend. You can tell that we're starting an uptrend because of this blue. The red and the yellow, well, really the red indicates a downtrend. This yellow is really the beginning of the trend. And then this blue. But once you see these dark blue ones come in and they start to diminish, you can tell that the trend is probably switching up. It might be reversing. But then we got these big blue ones in again. And look at the price, 308.57. So let me switch to the QQQ daily chart. That means each candlestick that we're looking at is going to represent 1 day of trading. And look at this. Look, 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 look. She's just floating in the air. She's getting up there. Again, our MACD, we have these green bars, which indicate an uptrend, and that they're solid green. I like that. You can see again, our RSI isn't oversold yet. So you guys, I want to jump in here before this RSI gets oversold. That's on the daily chart. I need to look at it on the other chart too. And then you can see on the daily chart, we have the beginning of this upward trend with these light blue bars down at the bottom. So let me go maybe to our hourly chart just for kicks. So far I looked at the weekly chart. You can see I'm narrowing in. I looked at the weekly, I looked at the daily. Now I'm going to look at the hourly. And we've got some support and resistance plotted here. And our next resistance for me is at 315. I think she may go for it. I'm going to blow this up a little. Okay, so on the hourly chart, you can see the first few minutes of the day that we've got a big green bar. I don't know if it's a big green bar, but it's a green bar. And we've got some volume here. It's green, so clearly buyers are in charge. These are a little smaller. The MACD doesn't show as strong a trend, but hey, we still aren't oversold. I'm sorry, overbought yet. And then this thing is kind of wavering on the hourly chart. Let's zoom in even tighter. Let's go look at the 15-minute. I just want to see what's happening. Okay, so look at this candle. This long wick here, at one point, this candle was green, solid green, and sellers came in and pushed this price down. So that's a bit of a concern. And you see how tiny, look at that red candle. I'm not surprised. Sellers are present. Even though these candles completed above all of the SMAs, look at this. Sellers are present. Y'all look at this volume. It's red is coming in, and you can see this green, dark green bar. This is, I'm gonna wait. I always suggest waiting anyway. The first 15, maybe even the first half an hour of the day. It can't hurt you to wait and see if a trend is really developing. Okay, so this makes me feel a little better. We've got two green bars, but they aren't the tall ones. This isn't as far apart on our MACD, these two lines. When they're spread apart like that and you've got these big bright green bars, that gives me a little more confidence in the trend. But look at this. Hey, that's undeniable in our TTM squeeze. But our RSI is approaching overbought. And so we know that thing is not going to stay up there forever. Generally, when it gets up there, it's got to come down. So we'll see what happens. I'm just going to be watching today. So let's go over to another thing I like to look at in the morning is this market watch. Oh, wow. Yeah. Look, that's green, folks. That's pretty green. Let's hit these watch lists and see what's happening with our watch list. I don't want this here. I'm going to detach, delete this gadget. QQQ. Let's see, what's this one? Okay, I'm going to detach this one. I'm going to delete this one too because I want to be able to see all of these companies that I have here. SPY, QQQ, Tesla, Apple, Amazon, Meta, Google, AMD, Microsoft, NVIDIA, Costco, Ford, Oxy. I don't think we need Oxy for today. I'm going to delete Oxy. I'm not doing anything with Oxy. I'm not doing anything with Square unless you guys want. I always keep Ford. So let me see. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. So what I have here is QQQ and some of the top holdings in QQQ. I'm going to look at this chart again real quick. We're going to let this thing settle down. And then we'll pick a decision, pick a direction for the day. I just want to see who's in the chat and who needs what. Good morning, Marilyn. Good morning, Elle. Good morning, Kathy. Hey, everybody. Hey, Linda. I'm so glad you guys are here. I promise you I am. I love learning. I love sharing what I'm learning. And I hope if you have a question, you feel comfortable enough to drop it in the chat. It doesn't matter what the question is. I promise. You can ask like, what is trading? And somebody here will attend to your question. Because more importantly, I don't need anybody to know how smart I am or what I know. I hate that. What in education we call that? The sage on the stage, where they want to tell you and show you how much they know. Hey, SLS. Good morning. I'm not the sage on the stage. I can't be the sage on the stage in this instance because I'm a new trader. So you will see that I'm willing to share what I know, but I don't know it all, you guys. I do not. But I'm willing to, if you drop a question here, if I can answer it, I will answer it. If I can't answer it, I will do my absolute best, my level best to find the answer for you and get back to you. So please ask away. Don't be shy. If you want to talk about candlesticks today, we can talk about candlesticks. And by candlesticks, I mean these objects here, the green bars with these, we call these wicks, the red bar. These things here that are sticking above and below are called wicks. And wicks indicate opposition because at one time, this candle was solid green. How did this wick form? Because sellers came in at this price and pushed the price down. The same thing is true with this red candle. At one time, at the height, this price was 308. Within this time period, it was 308.44. It got down as low as 307.65. So red candles fill in from the top. And now price is down to, what is it? 308.16. So at one point, price was 308, around 308.50. And the price has been pushed all the way down to 308.14. So the wicks indicate that there's some opposition there. And we know that at any given moment of the day in any market, there are buyers and sellers present. When you see these candles like this, the ones that are rock, they're solid bodies. This part of the candle is called the body. This part of the candle is called the wick. The more wicking you see, the more opposition. That's how I like to think of it. Because at one time, this candle was all green. And so sellers came in and pushed this price all the way down. So if you want more information about candlesticks, we have a Google Drive that has the Candlestick Bible in it. It's got all kinds of resources about candlesticks. Also, if you want to take time to watch for yourself, I have several videos that explain, the pros do it way better than I can. They tell you exactly how to read candlesticks. They will go and take you from the very beginning. What is a candlestick? Here's a candlestick. It represents traders. It represents buyers and sellers. This candlestick has a lot of information. So to begin, we're on the 15-minute time frame. Each one of these represents 15 minutes of trading time. This one represents 15 minutes of trading time. It tells us who's in control. It tells us the high price during that 15 minutes. It tells us the lowest price within that 15 minutes. And when you see this, it lets you know, okay, whoa, sellers and buyers were at war. Something was going on. And these candles with these really thin bottles that are these thin bodies, you see how they're flip-flopping back and forth? They're duking it out over this price. Buyers, generally, we want to buy at the lowest price. I do anyway. I want to buy low. Let me leave that alone because I don't want to confuse anybody. But candlesticks, you see this gray one like that? When it's gray like that and it's thin, a thin body like that, I'll show you this one. Those are called dojis. And doji candles, definitely, it's a definitive sign for indecision. Like the battle was so close, it's a tie. We can't even tell who was in charge. We can't tell if sellers were in charge or buyers were in charge. It's like a draw. So what I'm going to do now is, because I like to watch this on a tighter time frame, I'm going to come all the way down to, say, the 5-minute time frame. And you'll be able to see the same data. We're still talking about the same buyers and sellers, but instead of looking at them in 15-minute intervals, we're going to look at them in 5-minute intervals. I want to blow this up so you can see. Yeah, I like it like that. So now what we're looking at is the first 5 minutes, 10, 15, 20, 25 minutes. the first 25 minutes of the trading day. And we can see that to begin, buyers rushed in first thing this morning. You see that big old volume bar? That tells you, oh, buyers were present, and they were present in significant numbers because they were able to overcome any, sellers. But in the next 5 minutes, you can see this big bodied candle is red, which means sellers came in. And it's got some wicking at the top. So you can tell there were some buyers present. But overall, the second 5 minutes of the day belong to sellers. And we can see this is volume. So not as much volume as in that first 5 minutes. And you can see diminishing volume. This means the people that are present in the market. Volume here represents buyers and sellers by number. So when you see a really tall bar like that, that's a significant amount of buyers and sellers present. You can see there are fewer buyers and sellers present and still fewer. That doesn't surprise me as the day. These people probably got in right away, purchased their orders. It looks like they purchased a lot of calls probably, and then you'll see throughout the day how that works. What I'm curious to watch today is the MACD, and our MACD helps indicate the strength of the trend. And by trend, I mean, are we in an uptrend? Are we in a downtrend? You know you're in a downtrend when you see these red candles. You know you're in a downtrend when you see these two lines on our MACD. They're starting to point down. It's really kind of simple, y'all. And then you see this crossover here, right here, because here the yellow line was on top. You see this crossover here. Now the blue line is on top. Well, there's a change in the trend. You can also see on our MACD this light green bar and the dark green. It's some indecision here. Well, that makes sense. Look at this. It's green for 5 minutes. It's red for 5 minutes. It's green, it's red. They're in there fighting. Now, this is what I like to see. When you start to see these stair steps form, if all these other indicators are cohesive, or what is the word I want to say? I'll figure it out. But at any rate, once you see these green stair steps and your volume is green, and I'd like to see some, a little heavier volume. These start to turn bright green. This starts to open up. Your RSI is pointing up. And look at that. You see this? Did y'all see this TTM bar turn back to this bright blue? We could, let me go down to the 2-minute. I'm going all the way down now to the 2-minute. So instead of each one of those candlesticks representing 5 minutes, still we're talking about the same trading data. Nothing has changed. We're just looking at it in smaller and shorter time frames. Same data. You can see, again, buyers rushed in this morning. We had some sellers. And now look at this starting to form. This is what I want to see. I want to see these green candles come in. I want to see them make these little steps. That's like our first push. Yeah, this is what I'm looking at. And we are not oversold just yet. 308. Remember, we were down to 308, like 40 something. It's 308.66. This is our paper account. I'll open it up to you guys, but I think I am going to purchase some QQQ calls today. And it's up there. That RSI is up there. I generally don't like to purchase a call when the RSI is so. We should have gotten in earlier. Like this would have been a good place to jump in. I'm going to watch. And the reason I don't like to purchase or get a call when the RSI is oversold like that, overbought like that, it sometimes will pull back. And you can see it happened here. The RSI shot up to around that 70 value, and you can see it pulls back a little. This would have been a pullback. This might have been a gooder, Lord. Yes, I taught school for 30 years, a gooder. This would have been a better place to enter for a call. So let me do this, get that out of the way. So I just want to watch it here because that thing it'll touch it, it'll bounce, and it'll come back down. So I just want to watch and see you all. I think beginning traders, there are two things I think you could do to help you on your journey. One is paper trade. Do not, I repeat, do not put your money in the market. Don't, not now, not like this, not learning to trade options. It can be risky, especially if you don't know what you're doing. You all look at this price shooting up though. Man, I wish we had gotten in here. I'm going to see because it can stay overbought for a while, but I'm going to look for a pullback. And a pullback is when this RSI, it's overbought, it'll dip down a little bit. The price will come down. And then we can jump in and purchase some calls. But I'm pretty hopeful today that you all saw this market watch. You see all that green? You can look over here. QQQ is already up $3.11 for the day. SPY is up. Everybody's up. Let's see. Yeah, everybody's up today. Look at that. So it looks like it's going to be another green day. Ford is up 46 cents. This is going to be an up day. The truth is, we probably can't do much harm. You probably could throw a stick at the market today, particularly with tech, and make some money. So I'm going to wait for a pullback and see. Oh, it's almost like I'm we're experimenting. So let's do both. I'm going to purchase a contract because this thing is just shooting up. I am still anticipating that there's going to be a pullback. I'll go ahead and show you. It looks like it's pulling back now. 309.29, 39. Okay. I'm going to go ahead and purchase a call. You guys, even with this RSI up like this trend is so strong. And then we'll wait for the pullback and then purchase another set of contracts at the pullback. And then we'll compare to see, like, is it a good idea to purchase a contract when your RSI is so overbought like that? But look at it, it's doing a little pullback thing. You see that red candle? This might be a good time for us to jump in there because the price is lower and our RSI is coming down a little. Look at price coming down, 309.18, 309.12. So I am 309.3. That would be a classic pullback unless it just reverses the trend. And by reverse, I mean suddenly it would start to just decrease in price and go down. But look at the RSI. It was overbought. It's dropping down. You see, it took this turn. I'm just going to watch, but I am going to go over to our options chain and I am going to prep calls and puts for the day. Hey, Francis. Welcome, welcome, welcome. Hey, Monique. Hey, everybody. I'm glad you all are here. Yes, beautiful pullback. Beautiful, beautiful. Look at the price, 308.98. You want to buy, but do you want to overpay? No. I want to get in on this trade, but I want to get in at the best possible price. So, based on what I saw on my weekly chart, I went back to my daily chart. I looked at my hourly chart. I even looked at the 15-minute chart. It looks like today is going to be a very good day, a green day, what I call a day to purchase calls. I also look at my market watch. It's all green like this, y'all. It's a go. In paper money land, it's a go. We can be bolder and we can take chances with our paper money. We can experiment with our paper money. I don't want you to be afraid. You're trading in paper money. Test your theory, test your thesis. That's what I do. I learn more when I'm paper trading, because there's less at stake. But I learn so much when I'm paper trading. So here's what I call a pullback, you guys. Look at this. It was an uptrend. Price was going up. Now we're dropping. I want to watch to see these next couple candles that come in though, because it could very well be a reversal. Look at this. You see how far it's dropping? I don't know. A pullback, I think, is when you give back 25% or less of that move, but then you continue to move up. But if this starts to just dip down, drop, 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 that's not a pullback. That's a reversal. A reversal is when you have an uptrend and then it comes to a halt or it changes or reverses, and then suddenly you're in a downtrend. That's a reversal. A pullback would be you're in an upward trend, price cools off a little, but then it continues to go up. So I'm not quite sure if this is a pullback here or if this is a reversal. So I'm going to wait for that next candle. We don't have to rush in. You know, we don't have to rush in. We got all day. We got all day to talk. We got all day to chat. We got all day to ask questions. Yeah, look at that red candle, folks. I don't know. So now at this point, I'm not sure because this was the move. It was 2, 4, 6, 8, 10. And we could have even started the move here. Let's see, we opened up at 307, 90 something. We got all the way up to 309, 36. Hey, and now price is down. So I'm going to wait. But while we're waiting, let's talk about what we see. These candles each represent 2 minutes of trading time. So 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, 24, 26, 28, 30, 32, 34, 36, 38. Ooh, looky cookie. We like these long green, these long red bars like that. Okay, so y'all clearly that was not a pullback. That was a reversal. And by it's a reversal because now we're not in an upward trend. This is clearly a downward trend. You can see red bar volume, red bars. You can see the crossover here in the MACD. You see this red bar coming in. You see how quickly the RSI dropped. Even look at our lemon squeeze. It was, building up beautifully. And now that's the trend reversal. So let's see what we're doing today. Let's see what we're going to do. Okay. Hey, Monique. I missed you guys. I hope everybody had a great week. I didn't see you Thursday of last week. So I hope everybody had a great weekend. If you have a question again, please drop it in the chat. If there's anybody who's new, and you don't even know what a candlestick is, don't feel bad. You are with your friends. I can remember it wasn't that long ago. This was all like Greek to me, but I promise you, if you keep listening, you'll understand what are candlesticks, what are simple moving averages. You'll hear me refer to these 4 lines as SMAs. An SMA is short for simple moving average. And the simple moving average, I use the simple moving average. There's also an exponential moving average. They do virtually the same thing, but a simple moving average is this. Let's take this one. This one down here is my 200-day simple moving average, my 200-day SMA. This is just a plot line of the price, the average price of this stock or this equity over the last 200 days. And so what they do is they take the price, average the price over the last 200 days. They take 200 of those values, add them up, divide by 200, and they plot it as a line. So you can see over the last 200 days, the average price was around $307. This one is our 50-day moving average, the same thing, except for they take 50 days trading days. They add those 50 trading days up, divide by 50, and they tell you what the average price was over the last 50 days. Then I switched to a 9 and a 20. So my 9 days, same thing. with the simple moving average. They take 9 days of data, trading data, the price, and they add those 9 days up. They divide by 9, and you come out with the average. It's just like when we were in school and you had to figure out your grade and get the average. If you had 10 test grades, you add up your 10 test grades, divide by 10, and you figure out what your average is. Well, you could plot that on a line, and that's all they've done here. So this line represents 200 days of price. This line represents the average of 50 days of price. My yellow is 20. I used to use 13, but I switched to 20 because I heard Oliver Velez. I like him. If you haven't checked him out, please check out Oliver Velez. He teaches so very simply. And I just like, I think he's a little egotistical, you guys. My cousin, she went over to watch him and she's like, girl, why does he have on his sunglasses in the house? Look, I don't get into that man's business. I don't know why he's wearing his sunglasses in the house. It is a little, you know, it's a little Hollywood. I don't care because he's got good information and good intel. So I switched to the 20-day. I don't think it makes much difference if it's a 20-day moving average or a 13-day moving average. You just want to kind of know where price is now relative to the average. Is price trading above or below? Because when price is trending above, and if it stays above those, that's significant. You want to know price is moving up. That's when we want to get calls. We want to make that money. If price is moving above and it stays above these, that's a good sign. If price starts to move down below these, particularly if it dips below this 200-day moving average, that's significant. You need to know that. So right now we aren't below the 200, and it looks like we can't get below this 50-day moving average. And did you guys see how it got close? You see how this one got close? We call it, it's like testing it. It's testing this support because this average, I hope I can explain this where it makes sense. It serves as a support. That price is the average price. Think about when you go to the grocery store to buy, and I don't want to use a bad example. I'll use a better example. Apples. If the average price for apples is $1 a pound, pretty much during the course of maybe the shopping week or the shopping month, that price is going to be pretty consistent. Nobody is going to pay $10 for a pound of apples because the average price is about $1. So the market can support that. The market is not going to support $10 apples. People just aren't going to buy them. Eventually, the price is going to have to come in line. And that's the same thing that happens with these simple moving average lines. Price may get close to it and it can do a couple of things. Either it'll hang around that price and what we call respect that price. And that's pretty much what you see when it touches and it kind of bounces off. It respects the price. It's not going to go too much higher. It's not going to go too much lower. That's just business. But we can see if price starts to dip below it, where when sellers come in and there's a sell-off, we can see it will dip down below. But what you don't see too often is where, just in the normal trading day, where these red bars come in and it just tanks. Generally, something has happened. There might be some news that has caused the market to fluctuate so greatly from the average price. It might be earnings reports, or something generally happens to make price just be disrespectful, more or less, of these moving averages. So, Francis, I certainly do not understand it all yet, but I have definitely learned decisions need to be fact-based. Yes, there's no room for emotions and hopes and worries. Please know, hopes Hoping and praying, you are not trading, you are gambling. If you are hoping, there's no room for that in trading. I guarantee you, you will lose money. Here's what I know to be true. If you should not be trading emotionally, you should not be trading blindly. These are not, that's not solid. That's not good. That's not good practice. And so you're never going to hear me say that. When I say thesis, your thesis is based on your chart. How do I come away? How do I come up with the direction for the day? I'm glad you posted that, Francis. Here's some things that I do at the beginning of the day so that I can develop a thesis. Number one, I watch videos first thing in the morning. I do two things. I listen to the news. I want to hear all the financial reports. I want to know what the futures market did last night. I want to know what's happening in Europe. I want to know is oil going crazy? You want to know as much as you can about what's happening in the world of finance. So I always listen to the news first. I listened to a guy, look at this, Lord. Look. This is good for me, y'all, because I got some puts that I was getting whooped in the real world. So, sidebar. So in the morning, I listen to the news. I'm listening to see if there's going to be a Fed chair speech today. Are they going to be talking about interest rates? You need to know that because all of those things impact how the market moves. Then after I do that, you guys, I look at a guy, his name is Brandon Trades. That's the name of his YouTube channel. And he specifically trades QQQ, or he gives price levels and information about the equity that I trade. So he kind of helps confirm what I've either heard or seen in the news. So he will go through, he gives you the price levels. And by price levels and price targets, I mean this. He will tell you yesterday's high, yesterday's low. You need to know those because price will genuinely, either it's going to open above that or below that. You just need to know that information. So I listen to Brandon, I get my price levels, and generally he'll tell you if there is some support, which is here, where price just is kind of hangs out here, it won't go any lower. He'll tell me like what the day's resistance and resistance levels, like if price shoots up, it's going to have some trouble at a resistance level. I want to know all of that. And so then I do that. Then I come to my charts. So the first thing I do is get the news out of the way. I go to listen to Brandon trades so that I can get my price levels. I kind of double check myself. And then I go to my chart and I start out wide. You guys saw me. I start looking at the weekly chart because if you look at your weekly chart, you can see, look at this. Each one of these candlesticks represents 1 week of trading. Look at this in here, you guys. Whoa, I made some money in here. You all see this? I like puts. I really do. Because we're in a down market. I don't fight the trend. So 1 week, 2, 3, 4, 5, 6, 7 weeks, price went down. Then it kind of did some little sideways stuff. Price went up, it went down. But do you see overall it's really kind of snaking its way down? And then it kind of stabilized and went down and up. And so I want to look at that. And so here we had an up week, we had another up week. And so then I start to look at all of this. Like, is my RSI pointing up? It's above 50. That is significant. When that RSI stays above 50, and it's been above 50, that helps. Yeah, it coincides with all of this. Look at these green bars. These are indicators of an upward trend. Same thing. We see that little cooling in there. You see it right here. And then again, we've got these green bars. They're coming back in. So I'm leaning toward it's going to be a positive week because all of this stuff says, okay, looks like we're in an upward trend. My MACD is green. It's that bright green. My RSI is above 50. And it looks like it might curl. It could curl either way. But even with my lemon squeeze, my TTM squeeze, these blue bars, the bright blue bars, they are growing. They started small, they're tall. You know, it could still, maybe we could still get some more out of this upward trend. But it's important to know that after these light blue are the dark blue ones, and those indicate that the trend is cooling. So as long as they're light blue, I got these bright greens. I'm looking at this candlestick that represents the weeks of trading and prices going up. Also, you guys, they're above all of these SMAs. Those are all good signs that we could see some positives growing in price. So that's our weekly. I look at that. Then I narrow it down. I go to my daily chart. I want to see what has been happening over the last few days. Each one of these candlesticks represents one day of trading. And so let's go back 1, 2, 3, 4, 5, 6, 7. Over the last 7 days, price went up, price went up, went up, went up. Looks like might have been a little pullback here. Still another green candle. And this one, a little indecision. Remember, we talked about doji candles. Dojis are normally gray, but they have this shape where price opened and closed so close. It was very little movement there. So I'm going to be watching that. That's on my daily chart. But again, when I look at my MACD, green, 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 are they getting taller? Not significantly, but they are that bright green. I like to see these two lines on my MACD spread apart. The further apart they're spread, they indicate how healthy that trend is. Again, we're looking at our RSI. It's at a value of 61. That's above 50. I like that. It looks like it's pointing up. It has been going up. Okay. And then I look at my TTM squeeze, light blue, bigger, bigger, bigger. I promise y'all. That is as simple as I can make it. We are looking at colors, we're looking at position, and all of this represents price. You don't have to have a college degree to be able to determine that price is going up. Okay, price is trading above the average. That's a good thing. You don't need a college degree or anything to see lots of buyers. Here comes some sellers. And look, volume is diminishing. All that's significant. All these are just clues that help me come up with a thesis. Do I think, is it reasonable to think that price will continue to go up? Is it reasonable to conclude that price is going down? I'm not guessing. I'm looking at what this chart tells me. So from the daily chart, now I'm going to come down even tighter. I'm going to look at my hourly chart. What's been happening over the last few hours? Okay. Let's see. Okay, so for the first hour of trading or the first half an hour, we had all this green volume. Look at this. Now we've got this big, it's an equal size red candle. That's concerning. We've got some volume here. Now look at this. When you go from these greens to this dark green, that tells you, look at price changing. Price is trending down. It's no longer just going up. This trend might be waning. That makes sense. That's why you got this red candle. That's why your RSI is now pointing down. That's why instead of not having these big blue bars get bigger and bigger, now you got this dark blue. On the hour, it's telling me, okay, it might be going up overall, but in this hour, price is taking a downturn. So these are just visual representations. They're symbols. You don't have to be a math whiz. We have done no math, none at all. All we're doing is looking. Where are these candlesticks relative to these moving averages? They're trading above. That's a good sign. That's a good sign that if they're above, they may stay above. How long? We're not predicting, we're watching. This says, yeah, they're trading above, but in this hour, price is coming down a little bit. This RSI tells us, we hit up top. I told you all this. When it gets close to that 70, Generally, it doesn't stay up there long. It's going to dip down and it may go back up, but it's dipping down. And that blue, that dark blue coming in, definitely says, okay, price is cooling. So I'm going to come in even more. Let me just check this chat real quick. Okay. So I'm going to come in, I'm going to come down to the 15-minute because we're trying to get in a trade today. We're trying to see where we can make some money today. There are a couple of ways we could make money. If we wanted to this morning, we could have gotten in for a quick scalp. And a scalp is where you get in and you get out. And I'm talking about definitely less than an hour, certainly not 2 hours. A scalp is a quick, kind of surgical. You purchase your call or your put, your move happens really quickly. You got momentum, you've got volume, you've got a trend or a direction. You get in, you get out. So this is 15 minutes. Look, this would have been a good, I don't know how much money though. 307, 308, 309, $2. Yeah, you could have got in. That was 30 minutes. Somebody could have gotten in at the opening bell, rolled it up. Let's see, 307, 308, 309. That's $1. That's not a lot, but in theory, this is less than an hour. You could have bought at the bell, sold at the height, or sold somewhere in this candle in this first 30 minutes. You could have made some money. Here, you can see these big red candles. So prices coming down. I like to see that. 15 minutes of price dropping. Another 15 minutes of price dropping. That's 30 minutes of price coming down. I love a good crossover. You see this crossover here? By crossover, I mean where our blue line crosses over our yellow. You can see at that crossover the beginning of this downward trend. You see this red candle coming in. So all of these visuals are helping us determine what is the price doing. You don't have to guess. We did this. Look at our RSI. It was overbought. It got above 70. It got up to like 72. And I'm telling y'all, you can see it over and over again. It won't stay. It took this down. Look at this. Then these turn dark blue and they're getting smaller. Really? We can do this, y'all. We can look at these colors. We know green means good. Green's going up. We know red means coming down. We know that the tall volume bars mean there are a lot of people doing it. That's momentum. We can see diminishing volume. This is volume as well, but it's a lot of sellers. So sellers are coming in. And I'm telling you, when you see these big, nice body candles like that, that's a good sign. Because again, with trading options, you can make money if the price goes up. You can buy a call if the price goes up and jump off of that. Get in there, get out. You can make money if the price goes down. This is why I like options. If you're trading shares of a stock, like if you love Apple and you're buying Apple shares, like you're buying a whole share, do I have Apple over here? Apple is trading at $157.29. If the price goes up, you can make money on shares, but if the price goes down, you're not making money, you're losing money. That's not the case with options trading. With options, you can make money going up or coming down. And so we can see prices at 307.17. I'm going to be watching to see if price continues to come down, because my hope is that it comes all the way down and shimmies all the way down to this 30 value on my RSI. I want some big movement. I want it to continue to decrease in price. We can make money there. So now I'm going to even come down to my 5-minute. So instead of looking at that price action in 15-minute intervals, we're looking at the same data. Nothing's changed. Look at that, y'all. Look at that. See, you want to see that. That's a trend. So 5, 10, 15, 20, 25, 30 minutes. We just saw it. 2 15-minute bars is the same as 6 5-minute bars. It still represents 15 minutes. But this gives me a better picture because I want to see, are these candles big? That lets me know the strength of that downward, that movement. If there's a bunch of little ones with big old wicks and stuff, not so sure. But again, look at that. Pointing down, it's red. RSI coming down. Look at this red starting to come in on our TTM. I hope that makes sense, you guys. This is what you're looking for right here. Red candle, red candle, red candle, red candle, red candle. Yes. When they're mixed in with the red and green and alternating like that, this is basically chop. This is not where you want to be trading. This is after hours anyway. We don't trade during this time. But you don't want to see that. It's all caught up in these SMAs. You're not making any money. But look how these are all spread apart. These are just observations. So that's how I make up my mind, my thesis for the day. There are a couple ways that you can trade. You can scalp. Scalping is where you get in and get out real quick. You make the money, you close your computer, you go on about your business. You can make some good money in scalping, but those trades are fast trades. A day trade, which is probably more what we're looking at, something you purchase today and you sell at the end of the day, those take a little longer for the play to evolve. So when I'm deciding, like, I'm not scalping much, like getting in and getting out. Since we're here together, we're basically doing day trades. And that's where we decide, is it going to be a green day today? Is it going to be a red day today? We purchase either calls or puts. And since we're in paper money, sometimes we purchase calls and puts at the same time, just so that we can see, how prices of, what happens when you purchase your calls and puts. So we're looking at down, 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 down. That's how I decide what my thesis is going to be for the day. I watch the news. I want to see if anything is happening in the world that might impact the price. I listen to my guy, Brandon Trades, because he trades what I trade, QQQ. He gives out price levels. This, you can expect resistance at this price, meaning price might not be able to get any lower or might not be able to get above it. He gives me support levels. And I need to know that, because if you've got some really strong support at 309 and prices going up, you can anticipate you might want to take some profits at 309, because price could reject off of that support or resistance. So I don't want to confuse you, but support and resistance or price levels are important to know, because they help you determine when to take profits or even when to enter a trade. Support and resistance, if you want, I can go over how to plot support and resistance and what it means. If you need that, let me know. Okay, so look at this thin candle. You see that? When I see those, these are the ones I want to see, like big bodies, no wicks. That is definitive price action. When I see these, I know things are wavering slightly. This candle does not show the same kind of conviction with sellers. But sometimes they, you take a little breath and then she continues on. But when I see these thin ones like this, I was going to say, I wouldn't be surprised if you see a green candle coming soon. But think about it. You had 5, 10, 15, 20, 25, even 30 minutes of price dropping. At one time, the highest price was 309.42 and price dropped all the way down to 306.91. You could have made some money if you got in on this trade. For traders, the trick is knowing when to get in and when to get out. That's your job. But we don't have to guess. We can look at all these things to help us understand. Price was here in terms of our RSI. It rolled all the way down here. It's time to get off. If you bought a put up here, which would have been like on this candle or this candle, expecting price to go down, it went down. When it starts to get near this 30 value on the RSI, it's generally going to bounce back up. And that's what it's doing. You see, it's turning back up. So a good run might have been maybe get in on one of these candles here. You ride it all the way down to here. And you might want to consider starting to take some profits, because unless it just shows you that it's going to stay down here and ride and price is going to continue to go down, which it might. These candles are still coming in red, but we don't have a lot of price movement. You see, not a lot of change in the price. 307.11. That's all we're doing. I promise you. If you just do that, if you just look at a chart every day, and I suggest that you look at the same equity if possible, because bumping all around, it's just hard to find conformity. It's hard to develop, an eye for how that equity moves. I would suggest for new traders, pick one and pick one with a lot of volume. I mean, they get a lot of trades in a day, like SPY or QQQ. Apple is very liquid. That means a lot of people traded in the day. You're going to see price move. You don't want to trade slow tickers. Well, I don't know. You can learn on slow tickers. Yeah, you can. I like them too. I like Ford. Ford's a slower ticker, but Ford still moves. There's some tickers I hate them. I mean, because it's like watching paint dry. My goodness, you can sit there for 30 minutes and see 2 cent change. I don't have the patience for a slow ticker like that. I just don't. It's no fun. It's no price movement. Nobody's trading it. You'd have to pick something really obscure. And I don't trade those things, so I can't even tell you what they are. But anybody with eyeballs can see this is a clear downtrend. You can see it went on for 5, 10, 15, 20, 25, 30, 35 minutes. You could have gotten in at any point and gotten out. And look, at here comes another red candle. This is clearly a downtrend. Not only are these candles all coming in red, the only thing that concerns me is when they start getting really thin like that. Because generally, once they get really thin like that, this trend is cooling. The momentum, the volume, all of this stuff is, you want to see those big body candles. And look, if I do this though, this is a good perspective of them. This view, because you can see that that's a good one. This thin one, I'm going to perk up. I'm going to start paying attention. Not only am I going to pay attention that the trend might be changing. Look at it, we're approaching this 200-day moving average. Price can do one or two things, or it could do three things. It could sit here and respect this price, which means that's the average price. It's not going to be deviating much from the average. So it'll hover around there. You'll see like this. It touched it, but man, it didn't go below. This might be a good indicator too. Might be time to take some profits, because we don't know how price is going to respond when it gets close to this 200-day moving average. Look at this. Not only is it close to the 200-day moving average, it's close down here on our RSI. It's close to our 30 value. It's close to being oversold. Sellers. This trend might be changing. And then here we've got this green candle. Look at that. I wouldn't be surprised if these start to turn from this bright red to that darker red. I wouldn't be surprised. So we're just watching. And look at here. Here's the crossover. That crossover is generally, not always, can be an indicator of a change in the trend. So here comes our big green candle. So I personally, if I had rolled this down and I saw this candle coming, I'm not greedy. Could the next candle come in red and continue down? Yeah, it could. But is that likely? I'm going to say there are too many things for me that I would just jump off. I would jump off of here. Number one, we're approaching this 200-day. Volume shows us, look, this is a nice, healthy green candle. It wasn't a little one. Look at the RSI turning up. And look at this candle. I'm sorry, this is a bar. You see the change in the color? So that's a lot of stuff. The RSI is pointing up. Okay, price is going up. This has turned from that bright red to the dark red. this green candle's coming in and it's approaching the 200-day, personally, I'm taking profit. I'm taking profit. Could it continue down? Sure, it could. If what I would do in purchasing these, I would have probably purchased three puts at the beginning of this, wherever I decided to get in. You could cash in two and leave one. If you are anxious about, wait a minute, I think the price is going to continue to go down, leave what they call a runner and see if the price continues to go down after this candle. I don't know how likely that is, and I'm not into speculating. So that would be one way you could play this. I want to pull out and see if you can see my support and resistance lines. They aren't on here. I wonder if they're on my 2 minute. You should plot them across all the time frames. I generally don't plot them across all the time frames. I plot them. Let's see if it's on my 15. Yeah, I plot them on my 15. I plot them on the hour, just so I can kind of see where price is. If you watch advanced traders, not only do they use support and resistance lines, they're going to use trend lines. Those are those diagonal lines, or they can be parallel, they can be horizontal, but they kind of mark out the trend. And you're looking to see if price breaks out of one of those trend lines. So I'm not really where I want to be in terms of plotting trend lines, but you'll see that they're missing off of my chart, but they are great for helping you spot breakouts of if the trend is changing. So let's get over here and see what's happening in the chat. Yes, yeah, Marilyn is on it. You know, Marilyn knows the truth. Educate and study your ticker. The trend is your friend. Your ticker, it should, I'm telling you, I think if you're starting and if you aren't anxious to get in the game, like I'm not anxious to get in the game, y'all. I like trading. I do not trade every day. I haven't traded in days because I had some puts that were acting all crazy. I'm not just throwing money out there. I don't trade every day. I trade when I think I have a good thesis and I see a good setup. And by setup, I mean I'm looking at all my indicators. I'm aware of where we are in the news cycle, and I feel reasonably sure price is either going to go up or go down. Once I can formulate a thesis, then I will make up my mind if I'm going to buy a call or a put. And so, truthfully, for the last few days, I've just been kind of sitting on the sidelines, watching what money, how price is moving. So let's look at this candle that just came in. You see, it's near this 50-day. And I can say this to you guys too. The longer, like the 200-day moving average, if I'm not mistaken, these are more significant than, say, your 9-day. Well, that makes sense. They hold a little more weight because you've been tracking price for a longer time. It's no different than our analogy about tests. If you have a student and you take their test data over 200 days, I got a pretty good picture of how this student is performing because I've got 200 days of data. That's some strong, compelling price data. If I take only 9 of their test scores, like over 9 days, I know something about them, but I don't know as much about them as I know over 200 days. So when I think about these simple moving averages, I'm not surprised that when the candles get close to your 50-day and your 200-day, they have a little more trouble penetrating those because those prices have been that for, around this price for 200 days. That's pretty significant. So I think that the longer or the higher your SMA is, the more support or resistance it could be perceived as. More support, more resistance. It's harder to penetrate those because that price has been in place for so long, as opposed to like a 9-day and the 13-day. They run all through that 9-day. They just bounce in and out, up and all the time. But you'll see candles respond differently around these. These are a little more significant. Look, it's touching it, but it's not going through. It's touch all here. It has not dipped below that 50-day. It hasn't dipped below this 200-day. So again, this might be a good place to maybe consider taking some profits, because who knows what's going to happen with price around this SMA. And then when I start seeing these really thin candles like that, yeah, they don't give me a lot of confidence. This gives me confidence. So let's go back down to our 2 minute. When I'm just watching during the day, I like to watch on the 2 minute or the 5 minute if I'm just watching during the day. I want to point out something else too. I love this pattern. You all have seen me point this pattern out before. You see these hippity hops? Look at them. They're under on our 2 minute. They're wiggling their way under these SMAs. You can see price goes up, it goes down. But overall price is going down. You see this low here? We'll start with this low. You see this low is getting lower. You see this low is getting lower. And now we're just doing some side hops. But that's a hop. That's a hop down. That's a hop down. This would be considered a hop down. That low is lower than this low. This low is lower than this low. This low is lower than this low. So the lows keep getting lower. You'll also notice that the highs keep getting lower. Here's the high. Here's the high. Here's the high. So that is, that tells me, yeah, okay, price is really steadily going down. You can look here. Your MACD is telling you that too. But also look at this little crossover trying to happen. Look at the RSI starting to point up. You know what happens after we go through the red and the yellow. Here comes this blue, and these signify the beginning of an uptrend. So you can kind of start to see how your chart can give you clues about price movement. Down, 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 down. Now look at this green candle coming in. Up. I'm going to be watching this crossover right here. I want to see if we're going to get a string of tall green bars. I want to see if these are going to turn to that light blue, indicating that we have a for real upward trend, because price can reverse. It can go down and then suddenly decide to go up. So I'm always watching the chart. I don't have to do any math. I haven't taken out a pencil, not one time. We're not adding, subtracting, multiplying, dividing. That's why I say really anybody can trade. If you have the patience to be an observer, I think good traders are good observers. They're people who can make connections. You see patterns. You understand that when I see this pattern, I've seen it 100 times. I know that's what this means. When I see these two candles next to each other in relationship to, you have to be able to look at patterns and relationships. I'm telling you, that's why I think anybody can trade. You don't have to be a rocket scientist, but you do have to be an observer. You do have to be in control of your emotions. You have to be disciplined. You can't get angry if you lose money or disillusioned, because you're going to lose money. All investors do. I don't care if you're trading stocks. People who had stocks took a beating. The only difference between them is that they can't make money if the market goes down. They lose. Options traders can make money if the market's going up or down. That's the only reason I got into options trading. And I don't do it every day. The more you're trading, the more risk you incur. You don't want to trade anything and everything, because you're actually putting your money into that trade. That's capital. You're putting your capital out in the street. If you do that 5 days a week, you're exposing yourself to more risk. If you only trade the good trades on good days, you have minimized your risk. Your money's not out there every day, so you can't lose it. You can't lose money that's not in the market. So I don't trade every day. I used to when I first started. I was just so eager. Trust me, the market is going to be open tomorrow. It's going to do this hoppy thing down again. You all see these hops? Look at that. That's a hop. I would explain that to a kid just like that. Price can do a couple of things. It can do like a linear drop where you just see red candle, red candle, red candle, red candle, no green. It's just, it's almost like you could draw a straight line. Price just tanked. Or she can take her time and shimmy down. I call this is her shimmy. And she could just shimmy on down. If she's taking her time, she's going to get there. And then now I like this. Pay attention. Are the lows getting higher? Look at that. It was a low. Uh-oh, this low's getting higher. You can also see prices starting to creep back up. So just be an observer. Don't rush to put your money in the market. Watch, read, take some classes online. Give yourself the best opportunity to be a successful trader. And I think that starts with watching and paper trading. So let me go back over here to Market Watch. When we looked at it this morning, it was all green. I want to see if it's still all green. There's a little more red here, but not enough for me to conclude that it's not an up day. So I'm going back to my chart. You can find this Market Watch under the Visualize tab. If you hit Market Watch and Visualize, you'll get this heat map. And this is for all public companies. And so you'll see the heat map representation of some of the top publicly traded companies. And I come back over to my chart and I watch. I'm just trying to see but look at this, y'all. This is so cool. This is the 200-day moving average. Remember, I told you this average is a little more significant because it's been taken over 200 days. Look how she's just hopping on, sitting on it, sitting on it. We call that support. Support. I got to get my coffee. And she's getting close to it. That's not to say that price can't dip below. It absolutely can. But look how long it's taking. We call this a test, a retest, and a retest. It's testing this price. Is this price going to hold? Or is this big? You see this red candle trying to dip below? Or are sellers going to come in here and sell off so much that it breaks this support? Look at it. Look at it. I like that. I need price to come down. I really do. Okay. So it's still coming down. And look, 307.03. Now it's down to 306. We like big red bars like that, y'all. Okay, so price started coming down, coming down. She did a little bunny hop over. Yes. So we took a little rest, and now price continues to go down. I'm looking at the RSI. It is not oversold yet, but it's getting close. We got a crossover here. We got this red candle coming in. I would love to see, yes, I was sure about to say it. I would love to see this turn red because that means, okay, the trend is picking up. That downward trend, before it was strong, waning. Now it's picking up again. And we see these red bars come in and big ones too with no wicks. We like that. We like that. What's bad about that? You can make money. So if somebody had purchased a put, I'm a very cautious, maybe overly cautious trader. I wouldn't have gotten in or purchased a put right here. I might have waited, like the RSI is here. I might have waited to watch, maybe even here or here, to see this big candle go through all of those, 3 of those SMAs. Yeah, I might have waited for a confirmation candle to see, in fact, is this trend going to keep going? And in fact, it did. So maybe if I got in somewhere here at 308, I could still go all the way down to, we're at 306 something. You could still have made some money there. I'm not this kind of trader. I can't predict from here what's going to happen. Traders rarely catch the whole move. You get in here, you get out down here. That would be the whole move. Generally, you catch some portion of it. and you can still make good money catching a portion of the move. So now we're just going to be watching to see, is price going to continue down? Because it's so low down here, I wouldn't be in a hurry to purchase a put down here, because once it gets to the bottom, what's it going to do? It's going to bounce up to the top. All this thing does is this all day and night, from the top to the bottom, from the bottom to the top, from the top to the bottom, from the bottom to the top. You just want to, if at all possible, if you're buying a put, which means I think the price is going to go down, you want to buy somewhere when your RSI is up here, because you certainly don't want to buy a put when your RSI is all the way down there, because it doesn't give it a lot more room to go down. But what can happen is just what we saw. The RSI will turn up, kind of like a little pullback, and it'll give you an opportunity to get in because you know it's going to go back down. So I hope that helps you guys see why we look at and why being a good observer will make you a better trader. Marilyn is preaching today, y'all. Observe, control your emotions, practice patience, and be wise. The only other thing I would say is that if you're going to purchase contracts, don't go willy-nilly. You don't go in and put all your money on any trade. That's poor risk management. If you are trading with a small account, let's say you've got $1,000, you don't want to purchase a trade or buy contracts that cost $990. You've risked all your money on one trade. No, it might be wiser to purchase contracts for $100. That's a tenth of your account purchasing power. So I'm never putting all of my money in on one trade. But I do like, this is very typical here, what you see. It goes down, it gets close to the RSI value of 30. You see this green candle come in, it gets a little relief, it turns up, and then it could continue to go down, or it might just turn all the way up and reverse this from a downtrend to an uptrend. All we're doing all day is trying to see, is it going up? Is it going down? How long do I have? How long has it been going up? How long has it been going down? Do I have enough time? Is there enough momentum in this trade for me to get in? Price is going to do what it does. Does it do it quickly? One thing with options too, especially if you're day trading or scalping, you want your move to happen quick. You want to be right as much as possible. You want if you say it's a downtrend, you don't want to sit there all day. You want to see those big red candles come in. So we're looking for volume. We're looking for big candles, which represent momentum. Volume represents, and I think that lends to momentum, and it's lots of people are doing that. They're in the market. We're looking for these candles to get big, all of that stuff. Forgive me. Okay, so I'm going to peek back at my market watch. Still green. I'm going to pull back and look at my charts. And then I'm going to go and prep. Ooh, y'all, that was a nice little down. Yikes. I think because, look, I think she's going to continue to go down. That's a significant, from a height of 309.38 down to 306, 309, 3, 4, 5, 6. That's a good $3 from the height 309.27. If we get down to 306.27, that's a solid $3 drop, folks. I'm okay with that. I'm okay. Keep going down. Look at this red candle coming in. So here's what I think is probably going to happen. It's going to do that under scallop, where it does this and then it goes over. It goes down and then it goes over. It goes down and then it's going to wiggle its way over. And that's how it just works its way underneath those SMAs. I know you've all seen it. Sometimes this will hop above these SMAs and you'll see a higher high, a higher low. Well, when it's hopping underneath like this, you see here was a low, another low. The lows keep getting lower and lower and lower. So, yeah, we'll keep watching this. I'm going to go over to the options chain, which is under the trade tab, and I'm going to just prep. And today, I'm going to tell y'all how I got my little head smashed last week. I was trading. I did this. Don't do it. I'm telling y'all, don't do this. I wasn't going to trade on, I did this on Monday, last Monday. And I was going to breakfast with my friends. So I said, okay, I'm not going to trade today because I'm going to breakfast. Instead of just leaving it at that, I said, well, I was in bed, number one. I said, I'm going to just look. And I, put my trade together. You all know when you get ready to trade there, you have to tap this button twice. One is confirm and send, and then the other one is send. How in the world I hit that send button? I don't know. I promise y'all, it wasn't FOMO. It was nothing. I made a bonehead move in my sleep, virtually. So the real mistake was trying to trade before I was getting ready to go out. Not smart. Trading in bed, half awake. None of this stuff is smart. I'm telling y'all, don't do these things. I've done them for you. I've made the mistakes for you. Don't do it. So I got into some puts. I was looking at them, but before I purchased them, I would have gone through all my charts, and I didn't go through my charts. I didn't let Brandon tell me the price levels. I didn't do any of that. When you do that, I don't think anybody deserves to lose money, but I'm not surprised if you lose money. So I lost some money because I that's poor trading hygiene. Don't trade in bed. Don't trade half asleep. Don't trade in the dark. Don't do any of those things. I guess what I'm saying to you is you have to have such a healthy respect. Don't trade every day. Don't trade bigger contracts, big volumes that will put your money at jeopardy. Don't do any of those things. Okay. That's all I got. Don't make the mistakes I made. That's all I'm saying. So what I'm going to do, because we're under no pressure, we got paper money, I'm going to look at a put. Let me look over here at QQQ and see what's happening. Okay, she's only up $1 today. So I'm going to queue up or, prep up calls and puts. And I don't want these because these are only 3-day contracts. You all already know. I'm sorry. These contracts, the ones that expire today, this is like 0 days to expiration. This one expires tomorrow, 2 days, 3 days. I don't buy them. They're cheaper. They really are. But you have to get it right, because no matter what, if you buy this one, you buying and selling today. So if you don't get it right today, you just out of money. This 1 day left to expiration, if you don't get it, if your thesis is wrong, if you don't get it right today, you don't have a lot of time for that trade to turn around and work out in your favor. So because I'm new, I understand they're cheaper contracts to buy. I just don't fool with them yet. I prefer a 7-day. Really, to be honest with you, I would purchase this 9-day. And I'm learning also that you don't have to purchase so far up the options chain. You can purchase down here. So what I'll do, I usually like to purchase some close to at the money, and then I purchase some that are really up here so we can see the difference. Does it make a difference in how much money you make? It certainly makes a difference in how much money you lose, because these you will lose faster. You're not going to make as much money down here, but you don't lose money as fast either. So here's what I plan to do today so we can just be observers. I'm going to purchase calls at the money. I'm going to purchase calls that are way up the options chain with a really high delta. I'm going to purchase puts at the money so we can see how price responds. And then I'm going to purchase some puts that are further up the options chain just so we can look and see how price is affected. And I guess if I'm going to go back and look at this market watch thing. It's still very, very green. Let's see what QQQ is doing. Okay, we were up, look at that. We were up 99 cents, $1 now we're up 89 cents. I don't know, this thing is fluid. It's moving. It's doing a lot. Look at this. I don't know how I missed that. I turned away for 1 second. Look at that. That's interesting. Okay, but price is still coming down. Looking at this, those red bars came in again, got a little up. Let's go with puts. I'm gonna go with our puts. 306.80. Price is coming down. We aren't there yet. Let's start there and see how much money we can make. So let's start with the put. We're going to hit buy, and I'm gonna buy. Those deposits remain stable, but that they're looking at some other options. I'm gonna buy custom, and since these are three, I want OCO, 3 contracts, 4, 3 QQQ. So Kayla, I'm gonna do an OCO bracket because I want to set my limit and I want to set a stop because I don't want to lose too much. I'm going to also do the same thing I would do in real life. I'm purchasing 3 contracts. So I'm going to make all this 3. We would sell 3. Okay, 3. We're buying QQQ. We have an expiration date of the 30th. That gives us 9 days. These are puts. I want to set a stop and a limit, and so I need to change this to the percent. And I am telling them that I want to limit my profits. So, I like profits. I'm going to say, once I get to 20%, stop me out. 20%. This is my limit. This is how much I'm willing to lose. I need a percent. I'm going to go over here. And I'm not willing to lose a lot. Sorry. I'm willing to lose. That's 3. I'm willing to lose about 3%. I'm going to set it. Okay, I'll do 4. But really, I like to set a tight stop. And I'm saying stop me out if I get around 4% loss. I don't want to lose too much. Man, to be honest with you, I'll leave it at 4. But I personally, with my money, I would set a tighter stop, maybe 3%. If there's somebody out there who is listening and you know more than us, please talk to us or leave us some information in the chat about how you decide to set your stop and your limit. Okay, and we're going to go ahead and hit confirm and send. This is what I mean by you get 2 chances. And I don't know how I hit the send button, but I did. So, okay, these contracts, those 3 would cost us $1,600. So we bought 3, they're about $500 a piece. So this is what we're actually spending. I'm going to go ahead and hit send, and it's working on this order. Let's see. So it just got filled. We purchased 3 puts because we were expecting that the price will continue to go down. So I'm going to just quickly go over to this screen to see how those 3 puts that we just purchased are doing. And so far, what is the price? Let me move over here. We purchased 3 QQQ puts. Price has gone from 307.11 to 307.7. As the price goes down, we'll see our money increase. If price goes up, of course, we would lose money because we said we expected the price to go down. So I'm going to go back and look at the chart and look. Oh, look at this. Okay, hold tight. So look at this. upward, crossover. They're starting to go in green. Let's go get some calls. Calls are the opposite. We think the price is going to go up. So let's do the same thing with our calls. We'll purchase 3 calls. I'm going to hit, if you hover over this price, one will say buy, one will say sell. We want to buy. I'm going to buy at the money. I'm going to do the exact same thing. We're going to buy 3 contracts. We're buying calls. We're expecting the price to go up. I should have done the OCO order. That's okay. I'm going to cancel it and buy an OCO. I'm going to delete it and go back and do it again, because when I go to buy, I'm going to buy custom and create an OCO bracket, the same thing. 3. If anybody needs to see that again, let me know. 3. That's a great core holding here. 3. Okay, and I'm going to unlock this. I like to get stopped out at about 20% profit. You can set it at anything. You can set it at 10. I like to give myself some room. I'm going to set my stop pretty tight. Oh, I'm sorry. Let me get over to the percent. I do that every time. Did we get stopped out? Okay, that's cool, because we don't want to lose too much money. We set a tight stop, and because we purchased puts and the price went up, that's cool. We got stopped out. We only lost $78. That's how you should do it. I would have been in no trouble at all had I put a stop on that thing, but I didn't. So now I know how to do them. I think you should always trade with your stop and your limit in place. I'm learning. So I'm putting in a tight stop here. I'll make it 4%, because we stopped out at 3 or 4% here and we only lost $78. So confirm, send. It's working. You'll know when it fills. It just filled our call. And so let's get over here and see what these calls are doing. And so far, our calls are doing pretty good. So we got stopped out of the put, which is cool. And our calls, let's go see if price is going up. So we don't have any puts anymore, because the put, it stopped us out. It stopped us out because price started going up, and we were like, no, we don't want to lose too much money on this trade. So now we have calls, and calls are what you purchase when you think the price is going to go up. As long as price continues to go up, we should see some profit. Check over here and see what y'all talking about. Even in paper, yeah, use money as if it's your own money. Yep. Practice realistically. You don't want to go in spending $100,000. That's not going to help you, because when you really get ready to trade, I don't know how that helps. I don't know how you can make a correlation to that practice. When you practice something, you're practicing so that when you go to the real thing, it's almost like muscle memory. You want to make your practice as close to your reality as possible, so that the things that you practice on paper trading, you can transfer that learned knowledge over to your real money account. Nobody wants to be out here practicing like you trading with $1 million, and then when you get over there, that doesn't work. That doesn't help. So we can look at our calls. I think we made a good choice. We got in before the RSI was overbought. We got in at a good place. Look, we got this crossover here. These bars are starting to come in. We got some green volume, prices going up. So let's peek in on our calls and see if we're making any money on our calls. And you can see the calls are up $48. So that was a good, we'll see. I'm going to go in here and see. Yep, our calls, but look how quickly that changes too. Price is at 307.54. I like these little bars coming in here. I'm going to look at it on the 5-minute just to see how things are going. see what's happening here. I'll just make this bigger. All right. So what I'm looking at here, okay, we got this green. I'm sorry, the yellow. RSI is picking up. This downward trend is coming to an end. Hopefully we get us a little crossover here and we get some green coming in. We've got this. We like that. My only concern is, look at this. This is my 50-day moving average. This is my 20-day. So you see this candle could get stuck there, or it could go through. You always pay attention to what those candles are doing when they get near these simple moving averages. Pay attention, because generally you see how these sat here on that 200. I'm talking about they really respect that price, because that price has been the average for a very long time. And so I would be curious to see, are we going to have any trouble getting through this 50-day and this 20-day? So we'll see. If we get a crossover here and these start to come in green, like look at the little crossover coming in. So I'm expecting that maybe this next one, when we see this bar come in, it should be green. I want to see these yellow bars. I want to see our TTM squeeze roll into those blue. Yeah. You know, I love a good stair step pattern. 1, 2, 3. Come on in, green candles. Cross over. Give me some volume here. And we can see prices going up. 307.75. Let's see if we made any money. We up to $168 on those 3 calls. We didn't stay in them very long. Remember, we risked about $1,500. So let's see what our percentage profit is. So far, we're up 4%. We said we wanted to get stopped out at 20%. So if 5% is 168, it's reasonable to think 4%, 4 times that. Yeah. I don't know if that's going to happen, but you could stop at $168. You could cash out right now if you wanted to. Look, we're up to $200. It doesn't take long. Here's what you got to do. You got to get the direction right and you want to get in at a good place so that you capture this momentum. You want to get out too. So look at us. We're at 307.89. I want to see this thing keep going up. I want to see this crossover. I want to see these green bars come in. I want to see this continue. The yellow bars, it's okay if they diminish, because our blue bars are going to come in. So I want to see these stair step forms. So I'm going to go down to my 2-minute chart, because I just want to see what's happening. You know I'm nosy. I want to see. Look at that. That's a beautiful thing, y'all. This is what you want to see. These green stair steps. You want to see all this green here. You want to, I get excited when I see that. Look at that building. Look at this. The only thing that I would be cautious about is once this RSI gets up here to 70, you might want to start thinking about taking profits, because it can bounce off. You see that? Did you see as it gets close? It can turn down. What I'd love to see now is some blue coming in on my TTM, because this is that, the downward trend, and now we're going into our upward. If we see those blues coming in, okay, you guys see what we're looking for. Okay, look at that one. That tells me it could be trouble on the horizon. These strong coming in, this tells me it's some sellers present pushing this price down. So let's go see what we're up to. We're up to 171. 3 calls. We haven't been in them very long. Even with our losses on, why do I have, even with our losses on our puts, we must have already had some calls or something. Why we got 6? I don't know. At any rate, even with the loss on our puts, we're still up $102. So I'm just going to be watching this to see if this trend continues. If the trend starts to wane, I can cash out. I think I will, because that would be a typical kind of day trade. You're just in it for a little bit, you're in and out. You could even call it a scalp, to be honest, because it's so quick. but I'm hopeful. I'm looking at that. Look, there's that blue that I wanted to see. I'm looking at my RSI value. RSI is coming down though. And look at that turning red. Look at that turn that dark green. Look at that. See? I'll give it a couple minutes because we made some money on those 165, but we don't want to give any money back. And that's how we do it, folks. That's it. For me, to be honest with you, that's enough money. I would cash out $150, and on my smart days, I close my computer, I put that money in the bank, and I go mind my business. You know, on my days when I'm not behaving and I'm not so disciplined, I may stick around too long, but I'm learning not to stick around too long. So hopefully we can get above 308. We'll see what happens. I'm keeping my eye on my RSI. I'm keeping an eye out on my lemon squeeze. I'm looking at all the indicators to see, are they saying stay in this trade or get out of this trade? If you were looking at something a little more long term, like we're already in it, we have already looked at Market Watch, and Market Watch says it's a green day. But do you all remember? I hope somebody maybe screenshotted it. Y'all see this red starting to creep in? It was solid green at first, and now things are starting to turn. The market can turn during the day. Let's get back over here. We're up to $204 on those. So far today, even with our losing puts that we purchased and got stopped out, we're up $126 and change just like that. We're up $99. So hey, you've got to decide for yourself. Look at that. Looky, cookie. 307.81. See, I don't like to give money back. The only thing that might make me stay is that this for here, it's above all of them, and maybe it'll hold. But if this thing takes an ugly turn, I'm going to sell. I'm going to sell, take the profits. We can re-enter another trade. We could look at even another equity. If somebody wants to look at another stock, you can drop it in the chat. But see, look at that. Look at that RSI. Look at that dark green and the red. All of those. Oh, let's go back and look at our profits. 168. That's still a good deal. And we lost 78. We're still up 90 something dollars. Okay, there we go. Let's see. Is she doing what we need her to do? 307.85, 307.78. And I wouldn't walk away from this trade, to be honest, like walk away, like go make a cup of coffee right now. Look at that red coming in. If that red dips below this what is that? That's my 50-day moving average. I'm coming out. I don't like it. Look at that. And here comes another red, because this is just this short trade. We can get this money and get out of here. I don't like it. And we should have got out before. But you guys see, we could have got out when it was 200. You might say, okay, well, no, I'm only down 50. I only have $50. I'll wait it out. Okay, you could do that. When you take profits, it's totally up to you. So I'm going to see what this does. Maybe it'll rebound off of these. If it rebounds off of that, that works in our favor. But if you get 3 or 4 of these red candles in a way, you're just giving back profit. And I'm all about taking a profit. I'm telling you, if it's $100, I'm out of there. We have 126. But on the day with our loss, we're at 60. Let's see what happens. 307.69, 67. We'll see. We'll see. The outlook for emerging markets is souring ahead of the big Fed rate decision coming up. Marilyn, what do you guys think? Should we take the little profit or wait? Because I can't tell if these SMAs are going to hold this. It looks like it might hold it. You know, these blues keep coming in. I'm looking at my RSI value. You see RSI keeps going down. It was 54.650. Nope. Oh, I'm coming out. That's $126. We're going to take that little money and run. And so, yeah, it's down to 120. I'm going to create a closing order. And just like that, I tell you what we can do. Why don't we leave a runner? We'll sell 4 and leave 2 just in case. So we'll sell those. And we're waiting for it to, and we still have 2. So let's go back to the home screen. We're still up $76. We cashed out a little bit of that money. We captured some of those profits. We still have 4. Let's see what's going to happen over here. I'm going to go back to the 5-minute and look and see what our 5 minutes is. That candle there, man, that worries me slightly. I like this, but this is not a very strong, a really tall green bar coming in saying stay, stay, stay. I don't know. We'll see. 307.64. I tell you what, generally for me, when that price starts to dip below 307.50 and then hit the 40s, it's coming down. It's coming down. If it hovers around this 365 and maybe we see some 70s and some 80s, it bounces up that way. It's just like when you were taught to round in school. Anything 6 and above or 5 and above, that's positive. You're going to round up to the next number. Anything 4, 3, 2, 1, you're rounding down. That reasoning, I still kind of use some of that reasoning in my mind, because if this stays above 307.60 and it bounces to the 70s, it's a better chance. But did y'all see that go down to the 56? If it starts bouncing below that and we get some 40s and some 30s, I'm on my bicycle. I'm out of there. I am out of there, because generally it can always rebound. It can always reverse. This price can do anything it wants to. But in my experience, I want to see it bouncing up. Yeah, from this 60, I want to see a 70. Yeah, 66, that's good. Show me a 67, that's even better. 68, I like it. So now I would sit a little. Those 4, I'll let them rest. That's what I'm talking about. Do you all see how that price, you can see 60s, now we're going to see 70s, and from 70s, it might play there for a little bit. Then you'll see some 80s. But when it starts going underneath the 50-cent mark and it plays in the 40s and the 30s, no. I don't know. And this is doing quite a bit of bumping and bouncing. Okay, so let me go back down to my 2-minute. See what it says. Because we still got a few of them. I don't know. That's a big old red. Nope, 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 nope. Nope, 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 nope. I'm taking that. I'm going to sell those. That's not to say that they can't. Let's see. Sell 3, sell 2. We're just shaving off profits. Shaving them off. Yeah, look at that. It would dip to that 40. Yep. We're just taking profits a little bit at a time. We took 72. Yeah. 39. Yeah. We'll see. So that's one way you can shave profits off too. Take a little bit at a time. If the trade looks like it's turning against you, shave some of those profits off. You don't want to be there losing money. Let's see. 81. What is this price doing? 307.50. I'm gonna let it ride. I'm gonna let those last 2. Let's see what we got. Get over here. We have 2 left. Okay. And so far we've cashed out. We have $91. That's all we're doing, folks. We need to get the direction right. Is it going up? Is it going down? We preferably want to get in when it's doing that stair-step building thing, because that's momentum. It's like one here. It's up, 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 up. This, could be catching her breath so that she can continue to go up. We're back at 307.61. We have 2 left. I feel good about that. I feel good. We left 2 runners. If price continues to go up, those 2 runners are working for us. Who knows? It could take off, shoot off to the sky. But I didn't want to leave that trade open like that and not take any of the profit. Because once you cash out, that's your money. You know, this thing can tank and do whatever it wants to. Once you bank those profits, you got those profits. It doesn't matter. And I try not to let my runners steal the profit back. So I wouldn't let this thing go all the way back down to 306.65 without taking the rest of that money off the table. But I will tell you this makes me nervous. You know, when price kind of stalls like that and I see that, I don't know. I think, we'll see if we can, once this turns that dark green, the next to come is red. So yeah, I don't know. Unless something changes and we get a bright green bar in here, we could typically expect like a crossover and then we go into this downtrend. So yeah, I don't like that. I like when the price bounces above 50, the 50 cent mark. Like it'll bounce around 55, 60, and then 60, it stays there in the 60s, and then you see it move to the 70s. When it's bouncing underneath that 50 like that, it doesn't instill confidence in me. Let's see where we are. Yeah. I'm gonna leave them though, and we'll see what happens. Let's see what's happening over here. Yep, still going down. It's moving today. Yeah. So because we took some of the profit, I'm comfortable with that. And we don't know. I'll tell you why I would stay. If I had to make a justification for why to stay in this trade, let me tell you why. I would go back to my weekly chart. Let's see what the weekly chart says. Because remember, we got a contract for 9 days. Here's our weekly chart. So over the course of the week, look at that. It's bright blue. Our RSI is above 50. These are the bright green that we're looking for. This is trading above for the week, the past 2 weeks. This is this week right here, what this time represents. It is above all of the SMAs. So long term, it's looking like, okay, price might go up. I would look at my daily chart. I'm trying to decide for myself, should I stay in this trade? Maybe even today and beyond. Okay, now I'm looking at this. Look at my RSI is at 61, 61.29. My RSI is above 50. Look at these green bars. Not the strongest, tallest ones I've seen, but they're the bright green. I wish this was open a little wider. It isn't, kind of iffy. But look here, these are growing in size. It's a bright blue that we need. For me, this is almost like a toss-up. I don't know. I really wish these were spread far apart and these were growing in size, but I'm still hopeful. I'm hopeful. 307.55. We're still on the upside. So those are the things I would look at. Let me look at my hourly chart. Does my hourly chart justify staying in this trade just a little longer to see if it'll work itself out? I don't know. Look at this. Dark green, dark blue. And this is, this, I don't know if that space in between them is diminishing, but I don't know. So those are some of the things I would do if I was trying to decide, am I going to stay in this trade? Do I want to pull my runners or do I want to let my runners ride? I say I don't know, 60% of me, 70% of me says let them ride. So another thing I could do is look over here and see what QQQ is doing. We're up $1.67. We're up $1.73. We're up $1.77. Yeah, we're happy we stayed. Let's go down to our 2-minute and see what's happening. See if our runners are still doing some work for us. Yes, look at that. So we had that. We got caught up here and we're rolling back up. Did y'all see how that turned? Let me see. Look at that big green. That's buyers coming in. Look at the RSI pointing up. Yes, I'm glad we stayed. Let's see if we made a little more money. Yeah. On those, we made so far $113. Let's see. We'll see. So that's it. And if you aren't being greedy, if you're not trying to stay and make $1 million, trust me, $100 a day, that's good money. $100 a day is $500 a week, assuming. Let's not even say you trade every day. Let's say you trade 3 days a week. That's $300 a week. That's $1,200 extra dollars a month. That could certainly pay your utility bills. $1,200 a month would cover my rent. $1,200 a month, I could take a short little trip with $1,200. You're not spending all day. You don't work for a boss. You just need to figure out how to get in and out of these trades. I think too, by watching the same ticker all the time, I have a real sense of how this stock moves. I know this pattern. I know that hop under the thing pattern. I know when she starts to make these stair steps. I know when these candles get really small, what that's telling me that, hey, we losing some momentum here. So I say again, find one, stick with it. Here, this when it stays, guys, like this, when it bounces like that, I'm looking for one or two things to happen. When it stays around that same price for a long time, either she's gearing up to shoot up or she's gearing up to fall to the ground, one of the two. When you get consolidation, and it looks like we're moving into consolidation, it's consolidation when your candlesticks are all caught up in all of the SMAs. Let's see. 24. And then another thing I've learned, Marilyn has been with me. I've learned this one the hard way. See profit, take profit. If you see the money, take the money. You can always make more tomorrow. Don't, I think you can get yourself into trouble like hoping or waiting, like, okay, I know it's going to keep going up, it's going to keep going down. It doesn't have to do that. Anything can happen. Some news could roll through. Institutions do this. They know what they're doing. They can decide we want to tank this thing. Unbeknownst to us, you get caught up. No, 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 no. See profit, take profit. See profit, take profit. Look at that. 307.32. Look at this crossover here. Red. So let's go ahead and take our little pennies out. Let's see what's happening though. Yeah, we should have been got out of there. We'll see. 307.33, 307.31. So that's all it is. It's just this game of see a trend, try to get in on it, get out. Get in, get out. Cash in profits. I promise you, it's nothing more than that. That's all these people are doing. That's all these people are doing, y'all. They find a ticker, they ride the wave up, they ride the wave down. Nobody is calculating. I just hate it when people make it seem like, only the smart people can do this, or that's not true. I could teach third graders to do this, but you do have to be an observer. You do have to make good decisions. You have to minimize your losses. We have a stop loss in place. I could let this trade just play itself out, because when you put your stop loss in, what you're saying is, in order to let this trade work, I'm willing to risk $60, or you set that at the beginning. I'm willing to risk $80, because if I lose more than $80, I want this trade to stop. Please, Lord, don't take more than, I think I heard Oliver Velez say you shouldn't let a trade take more than $66 from you, something like that. But set your stop loss. You want to give the trade room, because it can dip and still go back up. You don't want it every time it dips $2, you're like out of there. No, you want to give it some wiggle room. It's going to drop a little bit. It'll pull back a little. But what you don't want is to sustain a loss of 40%, where you've lost $1,800 hoping it's going to turn around. Don't do that. Don't do that. So if you guys need to see how I place those stops, that's my protection. I have told this machine, this Google machine, that if this thing starts to lose money, it stopped us out of those puts because the direction changed. We purchased those puts somewhere around here, and then suddenly price turned up. So we would have lost money if we didn't have those stops in place. And it stopped us out at about $70. To be honest with you, I like that. I don't want to lose $100. It's easy to make $100 in the market, y'all. That's easy. You can make $100 almost by closing your eyes and picking something if you pick the right stock. But you don't want to lose $500 because now that's going to take you a minute to make that $500 up. You can make $100 up, and you saw it. You can make $100 up in 3 minutes. So keep your stop tight, but not so tight that it stops the trade out. Like, see, we should be getting stopped out pretty soon. If this thing continues to like, if another big red candle comes in, I wouldn't be surprised if our stop that we put in place stops us out of this trade. And we don't want to give back a lot of money. So that's it. That's it. Set what you're willing to lose. And I would say with small accounts, Oliver says 60 some dollars, $69. I'm with that. I don't want to lose more than $100 in a day. If I lose $100, I'm closing my computer. Unless I see another great setup. But generally, no, I'm out of there. Unless if I see something really good, like a strong trend comes in, and you would just be crazy not to take that trade, I would get out of there. I would say, yep, I'm done for the day. And then you come back to fight another day. Hey, Love Muffin. Hey, Courtney. Thank you for joining us today. We purchased calls and puts. The puts that we purchased went up a little bit, and then the trend changed. So the stops that we had in place stopped us out of that trade. It didn't allow us to lose more than $78. We purchased calls and we cashed out just under $100 on those calls. We also have a stop in order. I want y'all to see how this stop works, because calls you purchase when you think the price is going to go up. And so we got this little run up here. We made some money. We cashed out the profits. We put it in the bank. Look how this trend has changed. This price is going down. If it continues to go down low enough, that stop protection that we put in place is going to close this trade out. It'll say, nope, nope, nope. She doesn't want to lose more than $100. I'm not willing to risk more than that. And when we get there, it'll close the trade out automatically. So in a way, I'm hoping that it does that so you guys can see why it's important to have that stop. I think a stop is even more important than a limit. Your stop stops your losses. So it's a stop loss. And I'll show you how to set that up. So you determine before you even place the trade, okay, today I'm willing to risk up to $100. I'll let it take $100 from me, but not a penny more. So you would set that stop so that when it reaches $100, the trade closes. You don't have to do anything. You could walk away. I think a stop is even more important than a limit. A limit is what you put at the, if you're looking at the top and the bottom, let's say this is your trade. I got a bottom number. I don't want to lose more than $100. That's my hard stop. Your limit is saying, once I reach so much profit, I want you to sell. I'm not so concerned about that, the limit. You want to you want to minimize losses at all costs. You want to control your losses. You want to make sure, I think winning traders or successful traders are very mindful that their wins are bigger than their losses. This is a numbers game. You can take 10 trades and you can be wrong 6 times. You can be wrong 60% of the time and still be a winning trader if you keep your losses small. So let's say on 6 of those trades, You say, look, stop me out. Stop me out at $50. I don't want to lose more than $50. So 6 trades times 50, that's $300 for the week. I lost $300. But if on those 4 trades, the remaining 4 trades, you make $100 on each one, again, keeping in mind, you want your winners to be bigger than your losers. You're up $400. So on the week, you're still positive. You can, it's a numbers games, folks. Here's what I want you to leave with. Yes, managing your risk. That's what this is about. You want to keep your losses tight. And when you got a winner, you want to let that winner run. You want to, I usually set my limit pretty high. Like, I don't stop me out of my trade till I get to 20%. But I'm sitting there too. So if I get up to 15% and that thing starts to turn, I'm going to take the 15%. We're not going to be greedy. We're not going to let it take money away from us, hoping we get up to the 20. No, no, no. 15% profit beats the market. If you can average 15 to 20%, you're beating the average stock market. You're beating ETFs because they are generally, let's see, profit range somewhere between, let's say, conservatively 12%, on the high end 20%. If you can stay in that range in terms of your percentage profit, how much you're making, that's good profit. You beat the market. So I'm going to let this thing run because I want you to see, if we lose so much, it'll stop us out. Why is your stop loss, I think, more important? If I could only pick one, like if somebody said you can only pick one, I'm picking a stop loss because I want my losses to be small. And when that price or that thing shoots up, or whatever it is, your gains, you want those bigger. You can lose $10 6 times and have a profitable trade 4 times. And each one of those profits, each one of those winning trades is $100. You up 400. It doesn't matter how many you get right. You know what I'm saying? It just matters that you keep your losses tight. It matters that you let your runners run. So this is trading downward. I wonder, where are we in terms of loss? I set it at 4%. I'm just going to peek over to see. So where are we in terms of losses? Oh, did I set it at 5%? Because we're like 4.87. I'm going to see when this is going to stop us out. Is it on the chart? Oh, I know what happened. You know what happened? When I sold those, it takes the OCO, the stop out. Okay. So yeah, at 6%, I would never stay for 6% loss, you guys. Did you all remember we sold some of them? So we altered that order. These that are left, they don't have the stop in place anymore. So personally, let me look at it and see. I'm going to sell those just because that's a 5% loss. Let's see if it picks back up. I'm going to roll through all my charts real quick to see where we are. This was 2 minutes. We're in a downward. Let's see what it looks like on the 5 minute. Let's look at the 15 minute. I'm just looking to see, do I want to really bail? See, this is just starting a downward trend. RSI is under 50. Look at that. Yep, I think it's time to bail. Okay, we're down 3%. I don't like it. We're down 4%. That's how I would decide when to get out. So I would get out because you all know when I set my stop limit. See, look, I don't know if you all can see this, but do you see that OCO order isn't there anymore? Because I sold some of those. And once you sell it, I think once you alter it, that stop limit isn't in place anymore. I have to ask Johnny or ask Living My Dream about that, because we shaved off to get some profit. And I wonder if that doesn't, I'm selling these folks because I want out. I don't want to give back too much. And you can see that it's working. If I hit this, you'll see, oh, here it is. It says working. It hasn't sold those last two yet. So that's okay. Good practice. So this is our limit on to, we're waiting. Okay, so they did sell, and you'll hear that sound, and you'll see that little thing flash up there. So let me get over here to the chat. Is there anyone who has something that they want to trade today? Yes, yes, that quantity changes removes the stop loss setting. I wasn't aware of that, but yep, that's good to know. We can do it again just to verify it, or somebody in the chat who knows better. But yep, because when we purchased the original order, we had our stop and our loss in place. I shaved off some of those contracts to get profits. The remaining ones did not have that same stop loss in place. So you'll have to figure out how to add it back in or just be watching. Okay. But I can let's look at it again, guys, because we can take another trade. I'm going to look at this again on the hour. I'm going to do that whole step down thing because I'm thinking why maybe now might be a better time to get our puts. I'm going to look at this market watch thing. You all see the red starting to come in? Look, Microsoft is down $1, ADM is down, Nvidia and Costco. Those are four of the top holders. And I don't know why this bid ask is in here. I don't like that. I really would prefer to have the percent, and I'm going to do that. I'll tell y'all what I'm looking at, and then I'll show you how to change it in this chart. I'm looking to see how much they are down today. These are the top holdings in QQQ. So 1, 2, 3, 4, 5 are still positive, but 4 of the biggies are negative. So I want to know by what percentage they're negative. So I'm going to go over here. I'm going to customize this, and I want to know percent change because I need to see that. We'll move that, add that over here. I don't need to see the bid or the ask over here. Let me do that again. I'm going to take that out. I know what I like to see. Okay. So basically, I'm just looking, when I look at my market watch thing, I'm trying to see, is a green day going to a red day? And listen, this red is creeping in. Not only you can see it there, but you can see here. This morning, everybody was green. Now, 4 of these top holdings in QQQ have gone red. And Costco is down by, it's not a lot, 1/3%. Nvidia's down 1.5%. Microsoft's down less than a whole percent. ADM is down almost 3%. So that's significant too. If it's not down by a lot, that can change really easily. But if they're down 2%, 3%, 4%, 5%, that's telling you something. Every time I come back to this market watch, this visual, if this thing keeps getting red, that's telling you something too. So let's look at this. Overall, it looks like from here, you can even see it here, we're in a steady downtrend. We're starting, that's at the 15-minute. Let me look at the hour, because we might want to purchase a put. We're down to 306, 307. We were up 309. Look at that, 306.72.
Keep in mind, you may not be super familiar with it, but it is a $100 billion market cap company.
Look at this.
$750 million.
If that thing crosses over, yep, look at that.
And it runs the Temu shopping app.
I don't know. RSI is still above 50. I would like for that RSI to get below 50. I would like to see a crossover here before I purchase the put. I would like to see, this continue to come down, this turn red even, because look at that, 306 is just hovering there. Personally, I want to buy some puts because y'all know I like puts. Market's going down, why not have a put? But I want to wait for certain things. That's on the hourly. Let's look at the 15-minute chart. I want to see. Yeah, price 306.89. It's not coming down fast enough for me. Even though this looks like a downtrend, that RSI pointing up.
global
I
trade.
don't know.
China
I'll go back to the
about
2 minute
ByteDance and Shein.
just to
Who
kind of
knows?
check
Their
and see.
shareholders include Vanguard and
Okay,
Fidelity. Guys, Sarah and Dom,
we're
this all raises
down.
the stakes for TikTok CEO.
This
Joe
could very well be a
Biden
little
in years
pullback,
before Congress in
and then
February.
she continues to go down. But I would like to see that first. I would like to see a couple more red candles come in, closing underneath my simple moving averages. You see that red candle coming in? That's what I need to see. I want to see this downtrend continuing before I would purchase a put. So for now, I would just hang tight. I would need this price to come down a little bit more. But can I show you all something too? Look at this. I'm going to run a line. Let me show you. Let me drawing tools. Wait.
Which is essentially why you buy these companies too. Just hasn't kept up. So there has been.
I'm going to drop a line. Look at this. You see how this price will not go below 306? Basically, it's 306.50. But I'm going to drop it here all the way across to here. I don't like that one. Let me take that out.
Consumers here, and that costs a lot of money, like Super Bowl ads. Investors don't like that right now.
Undo added price level. Yeah, I'm going to put it underneath these wicks because that's probably a little more accurate. And this could be a support or resistance line that would be on your chart. Look at this. Test 306.50. It won't go. Test 306.50, 306. It keeps touching that line, but it won't go beneath it. So see, I don't know. I'm not convinced that price is ready. You know, I don't know. I wouldn't buy a put just yet. You see these going up? I'm more inclined to think it rejected off of that and kept going up. So we'll see. We'll see what price does. If we get an opportunity to purchase some puts, we'll do it. If not, if this trend is changing for the day and heading up, we could always purchase more calls. So because I don't know what is really going to happen, I'm not going to guess. I'm not going to just jump in because, you know, we in the market. No, we're going to wait and see what we need to do. And look at the RSI right here in the middle. And I don't have any real indicator if it's going up or down. 307.04. It could go either way. So we'll see. We'll see what happens. Yep. It is more. I'm telling you. That's why I think it's okay to sit. It's okay. You don't have to make every penny out of every day. We could just chill for a little bit. All right, y'all. I'm going to go get me some coffee. I need some paper towel and the rest of all the other stuff I need to operate. So I'm going to take like a little teacher break. It's almost 10. I will be back at 10:15. If anything happens, y'all holler. Marilyn, if anything happens, if she shoots up or she shoots down, shoot me a text. I'm going to go, be right back. I'm going to make me some tea, I think. Tea or coffee. I'm going to heat some coffee up. So I will be back at 10:15. Y'all watch a good video. Y'all want me to put on a video or something? Or the Candlestick Bible. I need y'all to look at that Candlestick Bible. If there's anybody who doesn't have access to the Google Drive, the only thing that you need to do in the Google Drive, there are presentations, there are PowerPoint presentations, there are videos, all kinds of stuff on candlesticks. Do yourself a favor, learn candlesticks. If you don't have access, all you have to do is subscribe. You got to be a subscriber. Then email me at fromlacktolegacy@gmail.com. Once you email me, I'll send you access to our Google Drive. There are all kinds of resources in there. All of it is free. The only thing you have to do is email me at fromlacktolegacy@gmail.com, and then I'll send you an invitation to have access to the Google Drive. And in that drive, you'll be able to see is everything. Our past Zoom classes. There are just tons of resources there, and it's all free. So you guys give me 15 minutes. I'm gonna go make me some tea. I'll turn the news on so that you can keep track of what's going on. And I'll be right back, folks. Let's see. And I'll turn the volume up so you can hear our trading day on Trader TV.
From the opening to closing bells, tune in to
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Good afternoon, traders, and welcome to Fast Market. I'm Tom White, and we've got a great show lineup for you today, including discussions and strategies in Meta Platforms, which is extending this year's gains after another upgrade, and ExxonMobil, which is bouncing on the back of gains in crude oil. And like Foley will break down consumer sentiment data on Nike, which has earnings after the closing bell. Now 2.5 hours into the trading day, stocks are extending yesterday's gains with a bounce in financials and energy stocks. The risk-on tone prevailed on Wall Street as a rebound in banks and assurances from authorities eased fears about financial instability that could derail the Federal Reserve's war against inflation and tip the economy into a potential recession. Now let's take a look at the four major indices. Off of session highs, S&P 500 up just about 0.5%. Dow Jones Industrial Average up over 140 points. NASDAQ 100 lagging again today as interest rates rise, up about 0.3%. And the Russell 2000 leading to the upside, up 1.7% on the back of those gains in regional banks. To help me break down this market action, let's bring in Kevin Hinks, my co-host. Kevin, pretty choppy day. Seemed like we were gaining more steam. Then Yellen came out and said a few things just about an hour ago, kind of cut into some of the gains by about half at this point. But it's all about the Fed tomorrow, and I think people are setting up that way.
Yeah, there's a lot of relief out there indicated by the Russell that some of the regional banks, the pressure, the tension going on in regional banks is subsiding. That said, we still have a Fed meeting tomorrow, and you've got a rest of the market that you got the S&P top 25 points already off its highs today. So you've got a market that's kind of stable and green and okay, but still a little jittery going into tomorrow's Fed meeting and a jittery into the rest of the week. So volatility is still here to stay, Tom. So what does volatility mean? A green day like this brings higher yields, and that brings struggling rallies on the upside.
Yeah, one of the key things I think tomorrow is the release of their dot plots.
Yes,
tomorrow.
4 times a year you get those.
Does that put a little bit of maybe resistance in the fact that how dovish Powell wants to be? Because they still have to give their dot plot, right?
Right.
And the terminal rate's been coming down.
So let's educate our viewers on what the dot plot means. It's for the Fed members, it's a snapshot of what they think rates will be going forward. Now, Jerome Powell has already come out in the past and kind of dismissed the dot plots as it's a snapshot. Don't look too much into them because as the data changes, all those dot plots will change. But you can measure the change in dot plots from last time to this time. Yeah. You can see overall sentiment. You can see how the members of the Fed feel about the overall interest rate picture. But remember, if the data changes going forward, so will the Fed. So there's a lot going on. But that snapshot that you'll get from dot plots, you get 4 times a year. It's not insignificant. I just wouldn't take too much out of it.
Remember, they said no rate cuts by the end of through 2023. They expected the last time they came out with this. Now the markets are pricing in cuts by July.
Markets are
sometimes wrong.
Yeah. Well, and for good thing, right? Because that's how we trade when markets are wrong.
Definitely a little bit of uncertainty out there. But putting a backstop on some of that uncertainty was Treasury Secretary Yellen. Let's bring in Caroline Woods, senior markets correspondent here on the network, to help us break down the story. Caroline, it's not the Fed put anymore. Is it the Treasury put where they're backstopping everything now?
Well, it certainly seems that way. You know, it's a blackout period for the Fed. So the big question is, what will Jerome Powell have to say about all of this banking turmoil tomorrow? We aren't hearing anything from him, obviously, until then. But we are hearing from former Fed Chair Janet Yellen, who, of course, is the current Treasury Secretary. She was speaking to the American Bankers Association earlier today, of course, following the collapse of Silicon Valley Bank and Signature Bank and that $30 billion capital infusion in First Republic to prevent failure. She says, she really stressed that the American economy relies on a healthy banking system, and really stressed that the U.S. banking system remains sound. She says that the situation is stabilizing. However, should the banking crisis worsen, she said the government is willing to take further action to guarantee that bank deposits are safe. She says they have a resolute commitment to that. As of now, she says the Fed facility and discount window lending are working as intended to provide liquidity to the banking system. She also said that deposit outflows from regional banks have stabilized. However, she said similar actions could be warranted if smaller institutions suffer deposit runs that pose the risk of contagion. Yellen also really stressed that what we're seeing now, or what we've been experiencing, is much different than the global financial crisis in 2008. She said our financial system is significantly stronger than it was then, due in large part to reforms that have happened because of the global financial crisis. So she's very much determined to really restore public confidence in the banking system and to prevent any more turmoil. She said, rest assured, we will remain vigilant. Yellen also appears in front of the congressional panels twice more this week, in front of the Senate and the House. But these comments, as you said, giving a boost to regional banks. We see First Republic up 40% today, KeyBank up 8%, M&T up about 5%. We're also seeing the larger, those are the regional banks, the larger banks up today, possibly in response to these comments. So definitely strength in a sector that's been pretty beaten down over the past few days.
Caroline, there's been a lot of talk about implicit and explicit and how they treat deposits in banks. And there's an explicit term of $250,000 per deposit, but there's an implicit theory that all bank deposits are, they just don't want to say it, right? And I think, Janet Yellen, you're right. It's fascinating that we've had these bank problems during a Fed blackout period, but that's going to end tomorrow afternoon. I'm sure Jerome Powell's going to have a lot to say about regional banks and big banks and overall and deposits. But today, Janet Yellen, remember, she's not the Fed chair. She's part of the administration. So do we think we're getting an overly positive view of what the banking sector is going through?
I don't know. I think we had guarantees from the Fed, Treasury, and FDIC that insured and uninsured deposits at this point are safe. You know, it's interesting because obviously for SVB and Signature, over $200,000, which is what the FDIC, as you said, would typically insure, those are safe. Yellen made it clear that they'll do this for other banks as well if that's necessary. She didn't actually address the possibility of a temporary expansion in deposit insurance in these comments today. But there are reports that regulators are really studying a way to guarantee all deposits. There's one possible tiered kind of pricing system approach in which depositors would pay extra if they want more than $250,000 insured. So we'll have to kind of see how all of this plays out. But we very much have the guarantee from the Treasury, the FDIC, and really the Fed that depositors' money is safe. So, we'll have to see what Jerome Powell says tomorrow. I think the big question will be, is this banking turmoil enough to keep him on hold, or is he going to be very much, still the inflation fighter? And I think that this is the first time in quite a while that there's some uncertainty heading into this meeting about what the Fed might do. It still seems like 25 is what consensus thinks, but there is a chance that he could be on pause. I haven't talked to a lot of people, though, that you were talking about rate cuts in July. I haven't talked to a lot of people who think those are on the horizon anytime soon.
Yeah, I think if you look at the Fed funds and the curves a little bit, they're pricing cuts right now. The market is in general, I don't know, but Treasury Secretary Yellen now creating some stability here in financial markets, which is helping stocks. All right, thanks to Caroline Wood, senior markets correspondent, helping us break down that story on a little backstop there from Treasury Secretary Yellen. But now let's bring in Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research. Randy, thanks for being here again today. I wanted to get your thoughts here. The CME FedWatch tool is expecting a probability of about 83% that we're going to get a quarter basis point hike. Kevin and I talked earlier this morning, maybe some dovish commentary following that playbook from Lagarde out of the ECB last week might be the best scenario here for markets.
Yeah, I mean, that tool, as long as it's existed, anytime that probability exceeded 60% going into the Fed meeting, they either got a rate hike or a rate cut. So that 80% level is well above that threshold. Now, obviously, that can change, but history says that that's always been the case. So I, like most people, I think, anticipate a quarter point hike, as we've said. It helps the Fed maintain its credibility. I mean, it's difficult. Think about this. It's difficult to fight inflation and maintain, questionable bank stability at the same time, because they both kind of work in opposite directions. But that quarter point, I think, is kind of that sweet spot. And so unless that number changes a lot between now and the end of the day tomorrow, and obviously it changes every few minutes, but not by that much. I'd be very surprised if they don't hike a quarter point, to be honest with you.
85.6% in real time, right?
Yeah, I mean, it literally is bouncing around.
Yeah, it's been moving.
It's like the VIX lately. But Randy, I wanted to go back to you. As far as volatility coming down over the last 2 days of gains for the equity markets, we're seeing that push back up in the Russell 2000 as some of those regional banks are outperforming today. Is that the signal that, hey, if the VIX is starting to fall, that uncertainty out there in the equity market might be warranted for maybe some gains or at least some consolidation with the S&P, above the 4,000 level?
Well, that's exactly what it means. I mean, some people call the VIX the fear gauge. That's not a term I like, because what the VIX really measures is uncertainty, how much people don't know what to expect. And we can obviously have big swings in both directions. Volatility, by definition, is movement, not movement in a particular direction. In the markets, it does tend to imply downside movement often, but we've seen the VIX elevated. In fact, it got all the way up to 30 when this whole banking thing first hit a few days back. And now that it's come all the way back down, I mean, it's only around 22 right now, so it's come down quite a bit. This is pretty much where we've been on average for about the last 15 months. In general, we've had a few swings up and down, but yeah, I think that means that people are becoming a little bit more comfortable with the stability in the markets. Obviously, comments from Yellen, while it may have hurt the markets a little bit here in the very, very near term, that implicit, if not explicit, guarantee of deposits, I think, and the fact that all these little regional banks that were getting beat up, some of them fairly, some of them certainly unfairly, are creeping back higher, says that some of the anxiety, some of the uncertainty is starting to go away. Thankfully, I think that's what we need. And this market, it wants to go up without a doubt. And I think if you can just get rid of some of that uncertainty, it will start drifting higher, especially given how much of a pullback we had when this thing started. Yeah,
creating some more stability here. But Kev, one sector of the market that's doing pretty well today are the home builders. Yeah. Existing home sales jumped 14.5% in February. This is the first advance in a string of 12 consecutive monthly declines to a 2-year low in January. So this is backward-looking data in February, but it's actually another positive data point after housing starts and permits last week.
Yeah, we're getting a slew or a trail of housing data that is just powerful and stronger
It's
than
starting
expected.
to improve, right?
Starting with mortgage apps, starting with starts and permits. Now getting into existing home sales. We'll get new home sales on Thursday. But these numbers, I mean, we're getting solid beats here. And remember, in the last 10 days, you can see rates have gone from 4% to 3.3, now ticking back up. You've seen the dollar go to 105 to 102. So all these things favor this. And remember, that's just the last 10 days, but all that interest rate move, it favors housing. And back to our theory that when interest rates get volatile, housing stays in a queue and it stays to the sidelines, and then it rushes in when things stabilize.
Yeah, because the demand,
it's quite impressive. Actually.
The demand is still there. We know that.
Right. There's always going to be demand for housing in the U.S. We're way behind. Ever since the 2008 financial crisis, I think we're net behind in terms of home supply.
Yeah, and I think some of these Gen Zs and Gen Xers getting used to rates that we grew up on, Kevin, when you got 30-year mortgage above 6%.
And they don't like them, Tom.
Of course they don't like it. It's been at record low levels for most of their lives. But Randy, when you look at this particular sector, strength in the housing market is a good thing, I think, for the overall economy and probably for equities at this point, because it's that big asset that we talk about that people have. Is this also, supportive of, maybe some consolidation, at least in equities, if not some gains?
I would say definitely gains. Again, as investors, many wealthier investors tend to have a lot of assets in equity markets and elsewhere. But for I'd say the bottom 50% of the wealth in this country, you're right. Their home is their largest asset. In most cases, it's not paid off, but the equity in that home is certainly greater than anything else. And unlike automobiles and other things they own, they don't continually lose value. They have a tendency to go higher. So yes, I'm telling you, I think this interest rate drop that Kevin was just talking about here, we're going to see explosive numbers, I believe, a month from now. When we get housing starts, building permits, new and existing home sales, and all those numbers, data for the month of March, I think those numbers are going to be huge, because this drop in interest rates has been very dramatic. And just like we saw it when the rates started going up, the housing market is the very first place that we see the impact from these swings in interest rates, just like we saw it when they started hiking rates a year ago. That's when the housing market got crushed. Prior to that, people were standing in line to buy houses. Well, once people, as Kevin said again, we're sitting there waiting. Sellers don't want to sell because they don't want to lower the price. Buyers don't want to buy because they don't like the level of the mortgage rates. Both of those things will improve, and I really think we'll see explosive growth this month. That'll be reflective in the markets a month from now. But if you wait till then, it'll probably be too late. So I do believe this is going to put some tailwinds behind the market right now.
Yeah, definitely. And I think one of the keys that we miss out on this, Kevin, is the fact that, demand's coming back. Mortgage applications,
Sure.
You said 2 positive weeks
in a row. We get one tomorrow.
But home prices only tick down slightly, which is good, right? So affordability comes back into play, but that allows other people to move, right?
I mean, it's stimulative for several parts of the economy, right? When housing, remember, everyone that buys a new house, you buy things for it, right? You go to Home Depot, you go to furniture, there's so many things that triggers. It's like a cascading. So housing, Randy's right. We talk about lags in the economy. The shortest lag is between interest rates and housing, right? So we're seeing that in real time get better, and that just triggers a cascading events of new purchases. You may need a second car if you move from the city to the burbs. There's a long list of things: furniture, appliances, durable goods. It's just a big cascading thing of events.
Yeah, positive for the economy, and we saw that through the latter stages of the pandemic, how that affected everything. All right, look, guys, let's take a quick break here. When we come back, we're going to look at Meta Platforms. Had another upgrade today. It's up over 65% so far this year. Fast Market's coming right back.
Okay. Let's look at this market again. See this market watch. See if it's getting redder.
Let's walk through charts. One of the most
Tesla's having a good day. Tesla up $10, almost $11. Let's just look at it. That would have been nice to get in on.
Time intervals or to favorite a time. Select style to change the appearance of the chart.
Red.
You can add drawings by
Tesla.
selecting drawings, drawing
What did
tools,
Tesla do
and then
today?
type of drawing.
Oh, okay.
For
Go
simple
Tesla, go.
comparisons, select studies.
Up,
This
down,
also gives you
up,
access to hundreds of
down.
pre-built
No,
studies,
sure.
including a number of classic patterns.
Up.
The grid icon lets you view multiple charts at once. You can even initiate a trade from the charts tab. Just right-click anywhere on the chart.
I'm just peeking at Tesla really quickly.
For more demos on
see.
how to think or swim, head to the Education Center on TD Ameritrade.
Looks like we're ready to do some hopping. And RSI is
Traders tell us how
oversold,
to make think or swim
oversold.
even better. We listen.
95.
Because platforms this innovative
Get
aren't
two.
just made
Did we
for
look at the
traders.
2 minute?
They're
I'm
made
just
by
peeking at
traders.
Tesla because they
Think or
are
swim
up
trading
almost
from TD
6%
Ameritrade.
today.
It's a 13-hour play. That's not a weekend.
I'm going to show you all something else that I want to start keeping
Download the TD Ameritrade
on my
so you
chart,
can
which is the
make
ATR. And I'll show you the ATR is the average trading range. And you want to know the average trading range because if the average trading range of, let's say, Tesla is $10 and she's already gone up or down $10, you kind of know she's pretty much popped her cork for the day. So I'm going to go ahead and add that. I'm going to add the ATR to my watch list. So on my watch list, you guys, here's some things I have. Of course, you have the symbol. I have the last price because I like to keep up with price as it's ticking. The green tells me that price has gone up since the last, price change. The red tells me price has gone down since the last price change. The net change, I like to see that because it tells me, what percentage has changed. I'm going to move this up. And I'm sorry, the percent change tells you that. The net change tells you in real money how much it has gone up or down. Why is there so much space here? I don't like that. But I'm going to go ahead and customize my watch list, and I'm going to put in the ATR, average trading range. So let's add that. And that I can just keep a visual on, how much does this stock or equity generally trade during the day? Like how much, Ford only, their average true range is 50 cents, where Tesla is $10, and Tesla's already up $11 for the day. You see what I'm saying? So how realistic, how much more is Tesla probably going to go up? I just want to know why I can't get rid of this big old space in between here. Why is there no break? Anyway, so Tesla's already gone up $11. The average trading range is $10.12. Is it realistic to think that she's going to go up another $10 today? Probably not. Let's look at QQQ. QQQ's average trading range is $6 in a day. It's only gone up by $1.60. So there's so much more potential theoretically for QQQ to price to increase. So I wouldn't be surprised if maybe, anything could happen, but Tesla's price might stabilize or go down a little. It could go up to, let's see, 1089, 1092. I don't know. I don't generally trade Tesla. I can't understand why I can't get rid of this space. I can see how to move it here. I can see how to move it there. Why is there no option to move this here over? Because I like seeing my average true range. This is exactly how it's set up. I don't know, I don't want that. Okay, let's get back over to QQQ and see if we're going to buy anything else today. I don't know, looks like she's on the uptick. Up, up, up. But she still hasn't broken the high of the day. So our high was 309.42. She hasn't broken that. So she could still bounce between that 309 high and this 306, which makes sense. This little trading range, 309.38. And the low was 306.45. So that's like a $3 trading range for the day. I hope y'all can see and hear me. Let me get myself back in here. Okay, you can hear me, but you can't see me. Oh, you can. Okay, it says, can you move the percent change to the left? Maybe that'll help. Yeah, I think so. I think you can order them. So let me try to customize it and see. I think if you change the order of them, move up. Let's see, I want the ATR. Think that. Okay, let's play with it and see. Okay, I'll do it one more time. Let me customize it. I did move it up. Let's try that again. Or how about I move net change down? Okay. Okay, now let's see if that allows us to move them over. Okay, well, it does allow me to do this. Hey, okay, that's better. Okay, so let's do this because I like to see it all at once. Okay, much better. Thank you. Carol, thank you. Thank you. I moved the ATR over and it allowed me to move. I don't know, one of those didn't have what I needed. So I've got the last price, that's just the running total of what the price is. The ATR is the average trading range. That's how much you can expect that equity on average to move a day, either up or down. The percent change is just what it says. I like the net change before the percent change. Let me see if I can move the net change up, and I wonder if that will mess us up. Okay, perfect. I like to see the money and then the percent. Beautiful. Okay, that's it. That works. And I can scrunch it over and still see everything. Okay, last price, average true range. I can even move this over a little. Yay. Thank you for that suggestion, because I sure did it. Yep. And I can still see everything I need to see. I like to know the last price, the average true range, the net change. That's how much actual money. And then the percent, it's up or down. Because if it's like these that are in the red, if they're only down like a 1/4% or 1/3%, that could so easily flip to a green. So, but if they're down 3%, 5%, 10%, that joker's out for the day. It's going to be red. So overall, if we look at QQQ in the top holdings, 1, 2, 3, 4, 5 are green, and 1, 2, 3, 4 are red. So it's kind of like a toss-up. Who knows what's going to happen the rest of the day? And then we've got all of this just choppy up and down. We don't have a real trend happening here. You all see that sideways trading? Let's look at it on the 5-minute. No real price movement. We haven't really moved at all because we're still at 305.60, 307.66. But do note that we have not been able to penetrate 306.50. We have not been able to get below 306.50. And our high was like 309. So 309, 306. That's our little trading range for today. And I'll drop this line so you can see it. I'll drop it over here. I'm not going to include that wick. I'm just going to include these bodies, the bodies of the candle. You all know this thick part in here is called the body. I'm going to continue this line all the way out. Perfect. So here's our trading range for the day. You can see all right here. We've just been going back and forth, and you can look at the you can look at our RSI. It's just been bouncing back and forth. Look, up, down, on its way up, down. It's just going to do that all day. It was up, it goes down. It was down, it goes up. It's down again, up again. You just want to get you a good slide going. I'm telling you, when you see that thing go from the top all the way down to the bottom, That's as good as it gets, top to bottom. When you see it hit the bottom and it shoots back and heads back up to the top, we're looking for those. As a trend trader, I'm looking for a trend. I don't do like, there are all kinds of strategies that you can do to trade. Straddles, butterflies, iron condors. They got all kind of strategies. And that's one reason I like to look at TD Ameritrade's news, because they'll talk to you about that. They'll construct a whole play for you. I'm trying to think, this might be one. Let me turn this up and see. They'll tell you when to get in, when to purchase it, everything.
$1 width of the call diagonal that you have risk on.
This is it.
So
He's talking about a diagonal.
Just over $1,000 to the upside, but that is if it goes far above 230 and you don't do any adjustments.
Right, that'd be a catastrophic move to the upside would cause that. But like I said, a move towards 210. And you could have a nice middle here. And like I said, you've got long Vega in an earnings event week.
Yeah, good look at that one. You do have some assignment risk on that short option that expires in 10 days here on the March 31st short. You do have that ability to roll or adjust that one. Also, if the market's open, liquidity is provided on that. Good look at a different type of call diagonal setup. Basically combining.
Did you hear that? That's a call diagonal. I don't do anything but a straight call, straight put.
All right,
these guys tell you.
Managing Director of Trading and Derivatives at the Schwab Center for Financial Research, for joining us. But coming up after the break, Kevin and I are going to be joined by Landon Swan from Likefolio for discussion on Nike, which reports earnings after the close. Stick around. Fast Market's coming right back.
Okay, did you guys hear that about Nike they have an earnings report. It will come out after close. You can be pretty sure that the price in Nike, so let's go ahead and put Nike, I think it's NKE. Yeah, let's go ahead and put Nike on our watch list. And I'm just going to peek at it to see what it's doing today. So look at this. This is so amazing to me. What day was this? Let me get this out the way. On Wednesday of last week, Nike was selling at $115. You could have so easily purchased a call with a 7-day, 8-day expiration, and Nike went from 115 to 124. That's all your money. That's almost $10 up in 4 days. That would be a swing trade where you let it sit overnight. The only thing I don't like about swing trades is look at this. You see what happened? You see how that price dipped? Ooh, that could be pretty scary. Then you go up and down, here, up again. Swing trading, you have to have the stomach to watch price go up and down, up and down, up and down, up and down. If you don't have the stomach for watching your balance dip low, because you really believe in your thesis and you do believe Nike's got earnings. Here's one thing you could do. You could go back and do some research on Nike to see. You could look at their profit and loss statement. Generally, if you're looking to buy long holds, we do what is called fundamental analysis. And fundamental analysis is where you look at the company as a whole. We're not doing that. What we do every day, looking at charts and listening to the news, that's technical analysis. Technical analysis helps you go in and make the trade. Technical analysis helps you decide when to get in, when to get out, how much to invest, when to take profits. That's technical analysis. But let's say you wanted to purchase Nike, Amazon for the long haul, long holds. You want to do fundamental analysis. And I want to find it because it's up here under one of these tabs. Let me see. Fundamental Market Watch. I think it's, let me see, analyze, probability, economic data, think back. Nope, here it is, fundamental analysis. Yes. Okay, if you go to the Analyze tab, let's say you want to purchase, like we purchased some Southwest stock the other week. But you don't want to get an options contract. You're not interested in just getting that money, day by day by day. You want to hold this thing because you believe in the company. You want to come over and do some fundamental analysis. And so what you do is go over to your Analyze tab, hit this fundamentals right here, and then we can put in the symbol. Let's go love. And then love is Southwest. Tap it. And it brings up all the information that you want to know about this company. I mean, like on a deep level. Here, it tells you what it's trading at currently. All of it should tell you about the CEO. You can go directly to the website. It gives you contact information, gives you some background information. This is what you want to know. This is their annual report. You can see it for the last 5 years. You can see what their profits were. All of that. That is fundamental analysis. You're looking at the health of this company. You can look at the valuation, revenue, net income, earnings per share. I don't know what all of this stuff means, but if I was going to purchase, say, we all know Apple, we all know Amazon, but say it's a company that you aren't as familiar with, but you want to understand how healthy this company is. Look at this market cap. That's how much of the market this company represents. Valuation highlights what has changed, potential upside and downside, business summary, source of value, key trends. Oil prices significantly impact the bottom line of an airline. Of course they do. So they're going to talk about that because that would impact how that company operates and trades. Look at this, passengers. Click, block, or division name to view forecasts. So if you're interested in studying not just the chart about how price moves, because that's what we do as technical analysis, we are looking at price action. That's all we're concerned about. What is this price doing? What has it done over the last 200 days? What has it done over the last 50 years? That's technical analysis. But when you're getting ready to put your money into a company for the long haul, you want to know what that company is doing. You want to look at it over time. You can download these reports. You can see the rating. The street says hold, Market Edge says avoid, research team says reduce your position, and I'm not sure what CFRA is, but it's got it at a 5-star rating. So you can take all that in for yourself. But this is the place that you would go to at least begin your fundamental analysis of a company. Let's say we already know Tesla, but let's look and see. Put Tesla in, it tells you what it's currently trading at. It tells you what these recommendations are. They say hold. Market Edge says this is a long hold. Put your money in. You should be okay for the long haul. They give you the rating, this 4-star rating. Gives you some background information. And then here are all those things, the 5-year trend, all of this information right at your fingertips. Profitability, their activity ratio. These are things you want to look at if you're looking at buying long hold stocks. We're not talking about options trading. Options traders aren't generally looking at fundamentals. We don't give a hoot about how this company is doing and how it's been doing over the last 25 years. We don't give a hoot. What we want to see is this chart. I want to know what happened yesterday. I want to know what happened last week because that's going to impact my trading today. So I would be curious to see what Nike does in terms of its earnings report. So pay attention. And if you look over here on your watch list, all these symbols mean something. So you click it. Blue tells you earnings. Their earnings today after market Central Standard Time. So once the market closes, they're going to have their conference call. And what I love about this, I think if you tap it, yeah, you can get in on the conference call, I believe. Event details, tells you the time. Notify only of events below. Conference call. It's a conference call type of event. Okay, it's Nike, blah, 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 blah. It's so much information here. Let's tap this red one. Oh, that's the conference call. And this one is futures up ahead of tomorrow's interest rate decision. Okay, futures were up. Yeah, I think that's what all of these say. But these little symbols here, if you tap them, there's generally some news under there. Like I tapped on the one for Amazon. It says AWS and NVIDIA collaborate on next generation infrastructure for training large machines, learning models, and building. Anyway, you can tap on it and read the article. So Tesla's got some news. Sigma Lithium short sellers say forget about Tesla buyout. Project 50 to 75% downside. I don't know what that is, but you can go read that article and find out. There's no news here for QQQ today. So, but look at how choppy. Oh my gosh. Let's see if she's going to go back up to the top end of this range. I don't know, but you can see very clearly that for today, we just been trading in this little range. We didn't get above 309 basically, and we haven't gotten below 306. I just dropped those two lines in there to kind of outline. So if, in fact, we've been trading in this range, if suddenly price shoots above that you want to be, that could signify a breakout. We have identified very clearly this range for the day. We've been trading in this range since the market opened for the last almost 2 hours. We've been in this range. If we were to suddenly break out of that range to the downside, you might want to look at a put. If we were to suddenly break out of this trading range to the upside, and of course, the whole time you're keeping in mind, where the ceiling is, where your price levels are. Because I want to say, let me go back on the 15-minute. I want to say there's okay, yeah. Is it 310? What's this one? 315 is a price level. I want to say around 310. There's another one. I'm going to extend this. Make it bigger first. Yeah. Oh, that's the 309. Okay, yeah. So 309, if we break out of that, make it smaller. That's our 309. We have a price level at 311, and 310 was a high. So we might want to check that out too. 309, 310, about the same, or in that area. And this is not an exact science, folks. I'm telling you. Support and resistance for me, it just kind of tells me I can expect price to kind of test that area. Just like with this here, it's trading in this range. It's been in this range for hours. If suddenly it does something different, that I want to know. But see, over the last, what is that? Almost an hour, price has been going up. I'm not going to get excited until I see it go above 308. If it goes up another $1 and something, then we're looking at a breakout. If it goes down below 306.50, 306.50, that's $1 down, or $1.25 down. Maybe we're looking at a breakout to the downside. So we'll see. That wouldn't surprise me at all, because generally during the midday, QQQ kind of is just a little dormant. It's not a lot. She's not running up and down like she was. And look at this RSI. When that RSI is right around 50 something, right in the middle, she's generally just chilling. We want this. We want that top to bottom. We want the bottom shooting up to the top. That's the kind of movement we're looking at. So I'm going to go back down to my 2-minute. Get over here. QQQ has a cool advertisement. Has anyone seen it yet? I haven't. I'm surprised. Marilyn, where did you see it? I didn't even know that they advertise. I've never seen an advertisement for QQQ. Did you see it online or did you see it on TV? I've never seen.
I kept it pretty tight.
No, I've never seen it.
133 call vertical. Right
Oh,
there
here,
on
listen,
the-
I'm going to
on
turn the
top
volume
range.
up because I want you to hear how they, on TD Ameritrade, they tell you exactly the play.
So I've got one that's in line with the expected move. So what you're looking here, it may not be great news, but Nike's probably going to put up some numbers, but their earnings are expected to be down 37% year over year.
Ooh.
So I don't think it's going to be a great number. I just don't know if they'll kill the stock based on that. So I kept a tight, only a $2 wide iron condor, collected almost $1, about 97 cents.
Yeah, and just going off of Foot Locker's numbers and the relationship with Nike, those were good numbers, but they just guided lower.
Right.
But it's rebounding today.
Right.
Okay, let's break this down, this example trade. In the March 24th weekly series that expires in 3 days, selling the 131, 133 call vertical, and then selling the 115, 113 put vertical. You're collecting roughly about $1. That's half of the width of each vertical in this. So that means you got $100 in risk on each spread on this, but it takes your break evens to about down to 114 on the downside. That's about $9, that one standard deviation move that the option market's priced in right now. And then up to 132 on the upside. Kevin mentioned that resistance level just above 131. So that's just above there, but a pretty, one of the building blocks of option strategies to take advantage of higher implied volatility with the thought that, hey, it's going to remain between those two break evens and time decay or theta is going to take hold and the price of that iron condor is going to contract on that. You do have some assignment risk on those short options going into expiration this Friday also. All right, Kev, good look at an example trade here. Nike had earnings. But when we come back, we're going to take a look at ExxonMobil as crude oil continues to move higher today after hitting 15-month lows just overnight on Sunday. Fast Market's coming right back.
Exxon hit a low. I'm going to peek at that chart. Although I only trade QQQ for now, you guys, I look at everything. I watch oil. I watch all the sectors. So let's look at Exxon. XN. I don't know the ticker for Exxon. Oh, I know it. XOM. I think it's. No. I think Exxon is XOM. XOM. Yeah. Yep, that's Exxon. XOM. Okay. So wow, Exxon was at a low of 97. It went up $10. Look at that. And that was in less than 2 days. From a low of 97, it closed here about $99. It got down to 97 and it hit a peak today. Oh shoot, 106. Whoa. That was some money. That was some good money today. If somebody got in the morning, this is what you're looking for. That's a good trend. Look, we always talk about this. Look how far apart these SMAs are. This is a textbook. You know, it's easy to see in hindsight, but look, it's that up, 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 up. These are spread far apart. You've got your green. Look at that. Overbought. Yeah, buyers, overbought. And look at that. Look at your TTM lemon squeeze. And you bail here. You get in at the opening bell. When you see this coming in, you get out of that trade or you buy a put and ride it back down. Ride it up, ride it down. That's 2 plays in one day. You just made money. 2 plays in a day. I never do back-to-back plays, y'all. I don't have it like that. Because once I'm up, it's like I'm out. I'm up, I'm out. Once I see it, it's like, yeah, I'm good. I don't need to get the up and the down. But potentially you could. You could get the up and the down. I haven't seen the QQQ ad. Where did you see it? It was on a commercial. Oh, okay. I'm gonna definitely be looking for it. That's my baby. QQQ is my boo. Okay, let's see what they're talking about.
The Fed meeting tomorrow.
We are seeing a little bit of strength here, Tom, but it is starting to weaken a little bit in the last 5 minutes. We are seeing a little bit of a drop to the downside here in all of the indexes, but you are right. We did see the market, especially the S&P 500, get about 1.5 points away from that crucial 4,000 level before being rejected after the existing home sales that came out with a 14.5% month over month increase, as well as Janet Yellen's comments really did not provide a lot of confidence here in the marketplace or answer a lot of questions. She really pushed back on Congress to be able to increase the FDIC limits as well as trying to push the debt ceiling. But overall, we are seeing energy, financials, and consumer discretionary leading the way, and then utilities, real estate, and staples are also lagging. When we're looking at the NASDAQ, that is also doing fairly well, up about 0.5% at this point in time here. And we are seeing this movement from the semiconductor space. NVIDIA has been rocking the market today with a lot of news, with new product offerings in order to try to capture the AI space here. And you can see that sell-off in other semiconductors like AMD, AML, and some of the others within that space, which is why we are seeing a little bit of weakness when it comes to the NASDAQ. And then the Russell is just taking it by storm. We are seeing a rebound within the regionals as of right now. There is some news coming out about First Republic, so I think that's very interesting. But the Russell has been able to be fairly resilient in the marketplace here today. And then also, let's look at the 2-year Treasury. We are seeing this actually move to the upside around 20 bips in today's session. What's actually very interesting, today's narrative going into the market open has been the fact that the Fed could raise rates by 25 basis points and then stop. But I'm going to tell you right now, Tom and Kev, that is actually potentially not the case. The Fed fund futures are starting to adjust again and actually pricing in 25 basis points for tomorrow and then another 25 in May. And that is something that has just came about in the last 2 hours after the existing home sales number printed. So it's not all said and done. By the end of the day tomorrow, we could potentially continue to see rates move higher, which is causing some easiness, not only in the 2-year, but also in the 10-year.
I think I'll Google it and see if I can find it, Marilyn. That's right. Representation is everything. I want to see us in the market. I'm telling you. This is my whole thing. It doesn't have to be $1,000. It doesn't have to be $1 million. I was talking to a young guy, and this is why, I love young people. I really do. And I love men the same. I love all of us. But I'm going to say this. I was talking to him, and we were talking about trading, and I was asking him, I said, oh, I didn't know you were a trader. He's like, yeah. I said, well, how are you doing? He said, I'm down like $10,000. I was like, $10,000? He whips out his phone. He's trading on his phone. And I'm like, why are you trading on your phone? And so I said, no, come see me. Let's talk. I said, I can help you. I said, what are you trying to do? He says to me with a straight face, I'm trying to make a lot of money. Sir, that's why you're losing a lot of money. I think young people are aggressive. And they can be a bit more aggressive. They got a little more time. But the object is not to make. I just think you'll get yourself in a lot of trouble if you wake up in the morning and you're trying to make $5,000, because you're going to do some things to make $5,000 that might not be wise, or you're going to take some risks to make that big profit that if you just slow it down, base hits add up. I think Johnny told me that. He's like, Sandra, yep, base hits are good. $100 to $300, you all. You have seen, we've done it here. We've done it. We are new traders. Nobody here is an expert. We have dropped, we have bought, we've in practice, we've never purchased 30 contracts, 100 contracts. I just don't do it. We keep it small. You can make money on 3 contracts. You can make money on a small account. $100 a day is good money if you think about it. Yeah, I was like, I don't know if I want to be working with you, son, because I cannot guarantee you that the way I move and the way that I think is going to produce the return you're trying to produce. But then I wanted to say, and that's why you $10,000 down, because you're willing to take risks that your skills can't support. We aren't there yet. I'm not saying people, there are people out there who can make $5,000 a day. I'm pretty sure they're more experienced. They have more capital to risk. Some of them aren't even risking their own money. That's other people's money. I'm not into it. I'm not into it. I'm not into it. Yes, I'm with you. A little gray-haired wisdom. You know what? You know how I feel about it. I feel like if you don't have an old lady in your gang, your whole little lineup is incomplete. If you do not have a wise one, just someplace that you can tap into, I just don't think your roster is complete. You need that balance. You need somebody to say, whoa, 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 whoa. I get it. I get it. Everybody wants to make money. There's a way to go about it. I just think you have to be realistic. What is your skill level? And when I see young people trading on their phones, talking about they want to make a lot of money, for me, it's like a recipe for disaster. There's going to be some heartache. It's about to be some heartache in your future. You're going to lose some money because it's foolish to go in with it. That's like get rich quick. That's like it's gambling. It's not Vegas. This is not Vegas. You all, I don't know. Maybe it means more to me because this is my retirement. This is money I worked hard for. I don't take a loss lightly. When I lose, y'all better best believe I'm trying to figure out what went wrong. I analyze. I know exactly what I did wrong. I know exactly where I went wrong. I know whether I didn't place a stop. I know if I was trading out of fear and emotion, if I was being careless. A loss is not a bad thing. A loss should be a learning experience. The fact that he could tell me he lost $10,000 and he was still trading on his phone, I was like, ooh, no way, no way, no way. Put your phone down, number one. That's what I told him. I said, sir, put your phone down. You need a real platform. You need to be able to play. You can't plot support and resistance on your phone. I haven't seen anybody do it. I guess you could, but it's just not the easiest thing to do. You need that full chart. You need to be able to look at over all the time frames. You need to, Johnny and them, I can't wait till they teach me how to do trend lines. I know how to do them, but I just don't trust my skill level yet. So no, if you are, I don't want to oversell to anybody. I don't want to disappoint anybody. If you need to make $5,000, if that's your expectation, I'm not the one for you. I'm not the one for you. I believe in fundamentals. I do. I believe in learning the skill. I don't care how long it takes. I got nothing but time. I have resolved in my mind, I'm going to be a master trader. Yep, I said that. I mean it too. I don't care how long it takes because there are people out here who can do it. And I know I can do it. I know we can do it. But it takes time. This is just like anything else. You want to bake cakes, get in the kitchen, start baking cakes, but it's going to take you some time. You got to bake it over and over and over and tweak it before you get to the place. I can make that cake in my sleep, but you don't get there overnight and you don't get there rushing. You don't get there by happenstance. And for me, that trading on your phone, and it's like guessing. I did that. That's how I know. Everybody started out on Robinhood. I still use Robinhood, but I use Robinhood just to check. Y'all already know how I use it. I use Robinhood to check the price. That's it. That's all. I don't fool with it. That is not enough information. And when I look back at how I was trading, you all, it's criminal. Because I was basically looking at that little diagram they had, and I was like, well, it went up yesterday. I guess it's going to go up today. I think no, that is insane. When I think about the fact that I put good money into the market, basically guessing, because I was guessing. I had no idea. I didn't know anything about market, nothing. So I don't advise that, y'all. I don't. And I think he's a smart young man. But I think that sometimes ambition and wanting to move fast and make quick money, that's what it is. If you think making quick money, you should not be trading options. That'll get you in a whole world of trouble. And please don't open up a margin account. Margin accounts, I've seen folks get themselves in a lot of trouble because you lose that money, you got to pay that money back. If they give you a margin of $2,500, you take a couple bad trades, you would get yourself in some trouble real quick. I do not advise it. I don't advise any beginning trader. I don't advise anybody really to open up a margin account. Trade with your own money. If you only got $100, trade with $100. I could tell you, go right over to Ford. We can get you a $25 contract, $50 tops. You just got to get in the game. Go trade Ford. You're not going to hurt yourself. But no, I have resolved to take my time. I understand there's so much that I don't know. I want to learn how to plot trend lines. I want to know what those channels are. I want to know what a rising wedge is and what a rising and what's the other one? I want to know what bull flags and pennants and all of that stuff means. But I have to take and do step by step. You just keep building. I don't plan on going anywhere anytime soon. I'm going to be here. So I'm happy. I feel like I've become a much better technical analysis. I understand what those candlesticks mean. I know when it's time to get up out of a trade. I have a feel for it. But there's still some nuanced things that I don't know, but I'll learn them over time. You know, I can remember when we first started trading together, Marilyn was here. I don't think any of us knew how to put on a stop. You should not be out here. I asked him, I said, do you use your stop? Or he's like, a stop? Sir, put that phone down before you throw some more good money away. You need to learn the basics. Learn how to read a chart. Learn how to size your investment appropriately. I'm still working on that risk reward ratio. It's a lot, but it's not difficult. That's the part. But there are levels. So of course I'm not going to jump in here and try to talk about we trading iron condors and butterflies and straddles. I'm not doing that. I'm going to stick with this thing. Just think though, if we could make $100 a day with the little bit of skill we have, that's what I saw, y'all. I was like, oh my goodness, I have very little skills. I've got a skill set, but I just made $200. We could do this. Imagine once we become master traders. Hey, okay, now instead of making $200 a day, you can make $400 a day. But nobody starts as a master. Nobody. And you don't get there overnight. You do not. Unless you're a genius. Geniuses can, have special powers. That's why they call them geniuses. I'm not a genius, but I am willing to work hard. I'm willing to ask questions. I'm willing to practice. I'm willing to make mistakes. I'm willing to revise it. Wow. When I look back at what I was doing in the beginning, it's, you chuckle. I chuckle. But every day we get better. So I'm going to peek over at this because I'm going to be getting out of here. It's almost 12 o'clock. Oh, it is 12. And y'all forgive me. I don't know what this time thing is doing anymore. I just can't keep up. It's 12 o'clock in the market and I've got to get out of here. But yes, Marilyn, we are always learning. And I'm so grateful to you guys that we get to learn it together. I'm telling you, that is the best. That's the gift to me. That's why I keep coming back, because I have my friends here with me and I see my friends in our Zooms. Marilyn, I owe you such an apology. I forgot to send you the link. And on Zoom day, I'm busy on Zoom day because I'm trying to pull stuff together. But I've got to get that email list better organized and together. So that's something we could talk about. But we'll be on for next Wednesday as well. We'll do a Zoom session at our regular time. But y'all, I got to get this clock and stuff synced because according to the market, it opened at 8:30 Eastern Standard Time. It's already noon. So I do want to get out because I do need to look at those QQQ puts in my personal account. I need to close, I think it's 2 of them out today. I need to close 2 out today. And then I've got one that has a few more days on it. I'm glad, Kathy. I'm glad. If you just picked up one thing, that's good. We are not in a rush. I appreciate that about my peers. I think we have learned that slow and steady really does win the race. Slow and steady is not a bad thing. In being intentional and holding off and not jumping in with both feet, head first, all your money. Please don't do that. Nobody, please, please, please. Let's just stick it out, ladies and gents. Let's just every week try to learn another thing. If all you learned today was how to put on a stop, that's better than we were last week. If all you picked up today was, oh, I can plot these two lines, these price levels to see if we're trading in a range, great. If the only thing you picked up today was about those simple moving averages, how they figure that out, that's great. That's more than I'm like this. I know more today than I knew yesterday. I'm good. Oh, hey, Ms. Vice. First of all, y'all, thank y'all so much. I'm going to go ahead and close out, and then I'm going to roll over here and check out my own account, close out those losing puts, and I live to fight another day. So I'm going to let everything, I'm going to wait till tomorrow too, because the chairman speaks tomorrow. It's always going to be some volatility in the market, depending on what he says. So I'm not going to drop any money. I'm not buying anything, or I'll sell those things I have to close out today, but I'm not going to buy anything, and I'll just wait to see what the market does tomorrow. You all keep your ear to the ground, keep listening. Nike's earning report comes out tonight. Just watch it, see what it does, and see how it affects the price. I'm going to have to put mine on because right now the market says 12 and my clock says 11. But see, I don't even know what time it is here. Okay. So my clock is set to, I think, Central Standard Time. And the Thinkorswim is set to Eastern Standard Time. So I got to work it out. All right, folks. You may want to hold on to the puts. Yeah. Oh, yeah. I'm keeping one, but two of them expire today. The ones that expire today, I got to get rid of. The ones that have a little more time, yeah, I'm holding on to those. You already know. I'm holding on to those. Oh, wow. It's 1 o'clock Eastern Standard Time. Lord, help us all. All right, y'all. I promise you, I got two different, my computer clock says 11. My Thinkorswim says 12. And you're telling me it's 1? I can't keep up. But y'all know where to find me. We'll be back here Thursday. So tonight, you guys, tomorrow we'll be on the lookout, looking at Nike, watching out for what the Fed chair says to see how it impacts price. Thank you, ladies. Thank you, Marilyn. You are just a gem. And I'll be back here on Thursday, guys. Talk again soon. Happy trading, folks. Let's go make some money. We're learning and earning. Talk to y'all soon. Bye, everybody. Talk to you guys. Bye-bye, folks.